Oh man, here we go. Tesla earnings. Nobody knows earnings quite like we do. Here we go, the poopy doopies.
Poopy doopy.
But nobody really cares about earnings. Who wants the long-term option on the future? You cannot bet against Optimus and Robotaxi. Very excited about the long term. I think life's gonna be nice when robots are feeding us. Like, I don't want to sit here and have to peel these stupid little things off the ends of the grapes. Like, who does this? Why would the manufacturers put these little sticks at the end of the grapes? You know, so we need a robot to peel this stuff off for us. It's crazy. Anyway, we'll be covering the earnings live. Will be a lot of fun. We'll go through expectations as well here, just so we can see what's on deck. Probably the biggest caddy, though, is what Tesla staff says about ZEV credits. That's the dollar holla question. Are we going to project potentially this hole of negative revenues before we start making money from Robotaxi, before we start making money from, Optimus or Tesla deliveries, like semi-deliveries, obviously vehicle deliveries themselves? Are we going to be in, a period of potentially negative cash flow because of the lack of these transfer payments from other corporations? So we'll see. What's actually interesting is the stock market right now is only implying a 6.4% movement on Tesla. So a 6% movement at 332, 6.4 is about a $21 movement. It would literally park us right above the 347 line if we go positive, or probably bring us to, under 318 would be the next line, right? So, we're literally in no man's land between two massive lines, 318 and 347. So we're going to one of them today. Is this finally going to be the catalyst for Tesla to go skyrocketing? Maybe. It depends what Elon says. If he teases a Model 2, we're going to the moon, baby. If you're listening, Elon, print me a Model 2, baby. Just saying. So we'll see. The actual numbers, I don't think will matter so terribly much. I think we can all agree with that. So, then we'll have Google earnings as well as ServiceNow. I personally think that NASDAQ is chilling out a little bit below our longer-term uptrend line here. This is the latter portion of the Nike swoosh we've been talking about since 2022. This trend line, I believe, is currently facing resistance as we anticipate tech earnings. People want to know. They need that extra little, tap on the back that's like, it's okay, buddy. We got you. That little pat on the back that's like, we're here for you, okay? We're not going to let you hang out to dry. We got you. Well, how do you got us? We spending more on AI. We've got more high margin service revenue coming in than ever before. We got all the dollar holla showing up here because, we're Google or we're ServiceNow or whatever, right? So Google, in terms of earnings, let's grab the Google expectations, and then I'll also grab expectations for ServiceNow. Google's implied volatility is only 5.39%, also below average. ServiceNow is slightly above average at 7.3%. So a little different on some of these. Tesla and Google slightly below, and ServiceNow slightly above implied volatility for movement on the day. We are going to obviously cover the earnings as they come out, but our focus will be that Tesla slide deck. And we'll also grab the times here so we have them. We've got about 9 minutes to go until we even close on the day. And then after the close, we'll get into the actual numbers. I'll read them off as they come in. And then, of course, we'll get into the actual reports and do some rapid analysis. So, okay. Tesla is 405. Google is 4 or 405. ServiceNow is 410. Interesting. We also have, I mean, we got actually a few more here too. We could look at. T-Mobile comes out. QuantumScape doesn't even have earnings, but I'll put Chipotle up on deck. I'll put it up on deck just for the giggles. So we'll put Chipotle up on deck. We'll put T-Mobile up on deck. And then we'll put Quantum. I don't know why we're doing this, but we'll put QuantumScape up on deck. What earnings do you have to report if you have no earnings? I get it. Like, momentum traders are looking for a catalyst. Ooh, Mattel will be interesting. That's fine. I don't ever think, this is just my opinion, I could be wrong. I generally don't think earnings are a great momentum catalyst for trading, just because, like, if you have trades going into it, it could go either way. And then usually the big move happens right afterwards, right after earnings. And again, it could be either way. It's like a coin toss. And then the question is, okay, well, what's the momentum thereafter? Is it enough to ignite continued momentum, or is it like a flash of the pan style moment? That's my opinion. You know, that's just what I found from trading. Everybody's got their strat. You know, some people like pre-market and post-market. I don't. It's also a sizing thing. So, you know, buy a share or two, big deal, in post or pre-market. Larger order quantities are always going to be done during market open time because you're going to get the better spreads. This is logical. We know this. So, yeah, Q's now, I mean, nice movement. Looks like still green on the day, which is good. You know, trying to get somewhere here. Couldn't get above 460 or 564 today. Was sort of the limit. Got 7 minutes left to go. A little bit of a climb here into the end of the day. A couple percent on AMD. This is nice. This morning in the Alpha report, talked about, I thought AMD might be able to push towards 160. It rejected 55 cents before, which is remarkable. I was also quite bearish on Open Door, as I have been yesterday and today. Even though I've been like pushing it for momentum, like this is great. It capped. I'm telling you, Sunday night, the Lyft driver was telling me how how Open Door is, you know, gonna make everybody a game change level of millionaires. And I'm like, all right. We are at the peak of the cycle. It is over. So, not that there's anything wrong, you know, drive Lyft. I'm just saying, like, when you're starting to shill your passengers the stock, you know, you could be a trader. That doesn't mean you have to, like, shill what you're trading while you're driving the car. Just drive, bro. So then we've got, obviously, earnings here on TESS. That'll be our catalyst report. I know this morning in the Alpha report, I have to say, it's pretty impressive that we nailed this line so hard. In the Alpha report this morning, I'm like, this sucker, don't trust the pre-market rally. It'll go right down to 598. And then you have to see, is volume actually going to hold to sustain a bounce? And you'll notice volume decayed all day long. You can't trade a momentum play if there's no volume. Volume is key. Tesla's about to lose the lead. If you have volume, great. GM's actually doing well today. Wow, 8% on GM. That's pretty impressive. Ooh, Palantir, nice move. Look at that. See, getting some good volume here into the end of the day. Very, very good. All right, good. So we're ready to rock. You know, I'm not sweating. Don't mind the discoloration on the house hack shirt. This is a house hack shirt. There's no, that's a shadow. Don't mind that. Nobody's sweating earnings here. All right, very well. So got CNBC for the closing bell, but we'll go check out the Doomers. House hack. Do we have a Halo? I don't know if it worked. I think I messed up the sound button. Can you hear that? The Halo guy go on house hack? I don't know if y'all can hear that. Google to 240, nice. Dudley, market's resilient. Oh shoot. What did I do? Hold on. What do we got over here?
How much are you paying attention?
Can't hear. No. Okay, I knew I screwed it up. I'll fix it.
Powell, and
I'll fix it right now.
The kind of shock that it may trigger in the market.
I don't think it's going to be.
Because if I don't do it, nobody's going to do it for me.
It's so widely disseminated.
The shock might be that he stays.
Exactly, it could be, which is a good thing in terms of a rational, a well-functioning market.
Somebody says, Kevin, ever been to a cookout? You mean like with the Boy Scouts where we all pitch a tent? I was a Boy Scout.
2 rate cuts that have been priced into the market. So what does the Fed do? You're coming up against the barrier of time before year end. We've been in the camp that we don't see the Fed cutting rates. If you have a look, inflation is one of the reasons that you would expect. That's under control. The PPI number is actually coming in a little weaker than expected, which also suggests that, while we're not going to see a runaway level of inflation, I'm not sure that inflation is as well controlled as the Fed needs for it to cut rates. And then comes back to the employment.
Here we go.
What are you hearing from companies that gives you confidence they're managing through the inflationary tariffs?
I think that what gives us confidence is actually going to come out is the initial earnings reports that we've had so far are showing that companies are beating. And so I think that the majority of companies have been able to handle it. The second thing is that the availability of information and knowledge, and that is something that's very different in this market than it's been when we've had inflationary times before. So I think that they know about it and they're able to adjust.
All right, Katrina Dudley, always a pleasure. Thank you for joining us today.
Thank you.
Katrina is Senior Investment Strategist over at Franklin Templeton. Of course, it depends what kind of company you are, what your market position is in terms of whether you can absorb those higher costs triggered by the tariffs.
House hack.
Absolutely, and I think...
There, you should be able to hear it now.
House hack.
Kevin is very talented, but I don't know if it's going to be him, but he's a very talented guy. Kevin's somebody we'd consider. Kevin is fantastic, too.
Kevin is much more interested than most people, by the way, in the balance sheet.
Let's go! Hi, I'm Kevin. All right, boys and girls, get your hair ready for earnings. I need to be like Johnny Bravo. Like have you ever seen the black guy who's on TikTok who goes through the airport? It's so funny. It's great.
Million vehicles this year. Let's see if Tesla gives us a range in terms of what they're expecting. Also, what do they tell us about robotaxi growth? Or, Scott, is this going to be a case of...
We don't care about all that stuff. We care right now about the ZEV credits. Tell us it's going to be okay. Coddle us. Elon, hold us by the weak place and make us feel comfort. We must have ZEV credit comfort. Then we could talk about robotaxis.
Of course, don't forget about Alphabet today, too. So we're about to ring the bell here at the New York Stock Exchange. And we're going to go out on the highs of the day. The Dow's pushing 500 points. Some positive trade news obviously helping things out today. The Russell is outperforming. And we got a record close for the S&P and the NASDAQ into OT with Morgan and John.
All right. Nevada officials in early talks on robotaxi service for Tesla. Well, that's exciting. All right, we are now waiting. First up on deck is Google, and then at 5 minutes after, we'll be looking for Tesla. I like how they say breaking news, but there's no breaking news.
The U.S. may be close to an agreement with the EU. This is the 12th closing record in 2025.
That was news 4 hours ago when your boy Meet Kevin covered it. That's when it was news. It's not news now. Okay? Not news. Not news. Sorry. Just saying. All right. Come on, baby. Come on, baby, light my fire. Oops, I accidentally closed Chipotle. Come back, Chipotle! I just had a little bit of Chipotle yesterday. Max didn't eat all of his quesadilla. So I'm like, fine. T-Mobile sees, oh wow, that's a good beat. 6.25 million net adds in 2025 versus the 594 expected. That's great. Average revenue per user, 50.62 versus 49.91 expected. T-Mobile, I will say, is an excellent service, by the way. Very, very, very good. They're my fastest and most preferred a cellular data service, and I have all of them. Well, I have Verizon, T-Mobile, AT&T, Google Fi, Mint, which I know like half of those I mentioned are all just T-Mobile anyway. I recognize that, but yeah, it's just great. All right, so okay. So T-Mobile's only up about 1.4% after that, though, honestly. Somewhat surprising. Oh, well. Okay, Google's still not out. ServiceNow is not out. Come on, Tesla! 3 minutes, 3 minutes. You know what we should do is prop them up over here so we could see them. So let's just go put them all up. Let's put Tesla, T-Mus. There's T-Mobile now 3.4%. That's good. It was a good beat. T-Mus, Mattel will be coming up. QuantumScape, Now, and Goog. Goog! Ooh! A green candlestick from Google. What could that mean? Google Cloud revenue, it's a beat! 13.62 versus the estimate of 13.14. 13.62 divided by 13.14. 3.6% beat on cloud. Oh, Google search beats. Send it to the moon. Google search, 54.19 billion in Q2 versus 52.86 expected. A 2.5% beat. Alphabet is increasing CapEx to $85 billion. Send it. Let's see here. EPS comes in at 231, beat versus 218. CapEx in the quarter, 22.4 versus 18.2 expected. YouTube ad revenue, 9.8 versus 9.56. Google Cloud revenue beat. That's good, man. It's across the... And the stock is tanking! It beats across the board like Netflix. And it tanks. Well, I mean, it's... Yeah, it's tanking.
Lost the lead.
Lost
the lead. Poopy doopy.
Pull up. Go around. Wind shear ahead. Sync rate. Sync rate.
That's not fun. Alphabet continue to see strong performance in YouTube, especially YouTuber Meet Kevin.
Kevin's somebody we'd consider. Kevin is fantastic, too.
Huh. Interesting. Cloud annual revenue run rate over 50 billies. Continue to see strong performance in YouTube. Okay. All right. T-Mus. Lyft's guidance. Very good. QuantumScape's not out yet. Chipotle's not out yet. All right. Tesla's on deck in like 15 seconds. I need more coffee, boys and girls. I can't handle it. We can't handle it. Drink more. Less talk, more drink. I'm gonna scroll down these candles because we're gonna get a big fatty over here. Just a big rocket ship is what you want. You know, we'll just bias up right to the line, baby. Right to the line. Have I mentioned you could use coupon code release the files at meetkevin.com yet? Get lifetime access to the Meet Kevin report. Ooh, Mattel came out. Mattel, guidance, resumes guidance. They beat on EPS. Net sales missed though. Womp womp. Down 5.5% on Mattel. Google's now down 2%. Netflix, look at that, like rejecting off my line again. It's the lines. Oh, I see the rocket ship forming. I don't see it. I don't see it yet. Somebody sees it. I don't see it. Somebody's either got a lot of hope or they got a leak. Somebody got a leak. I don't have the leak. I don't know why I don't have the leak. Who's got the leak? Nope. Reuters doesn't have the leak. The Doomers don't have the leak. The website doesn't have the leak. Insider trading?
Welcome. Nice to have you. So you want to talk about lovemaking, right?
Nope. Still no data.
Betrayal.
Come on, bro. It was due a minute ago. Man. Can't handle the truth. Oh. Oh, Mattel's almost back up, though. Oh, shoot. I broke my light. Too much whacking. Oh, yeah. I shattered it. Oops. Still not out. It's my chin light. You never have a chin light? Haha! That one. See? Look at that difference. Look at my glow. Ready? Just cracked it. Okay, well. Any minute now. Hedging gains for... Oh, Google lost $112 million on hedging. Well, if you've ever felt bad about hedging, they just lost $112 million hedging. Oops. Chipotle's still not out either. Yo, Elon, get off the can and release the earnings, bro. Release the files. Yes. Oh, man. Come on, baby. Elon, release the files. He's currently requesting a judge to release the files while also telling the judge not to release the files. We order you to release the files. But no, seriously, don't release the files. We order you, I say publicly. We order you to release the files. Don't release the frickin' files, damn it. It's the stupidest thing ever. Come on! Well, Nvidia's up 1% on the Google CapEx news. T-Mobile's still up about 4%. Not bad, honestly. You saw the good, yeah, Nvidia. Broadcom's also moving up afterwards. ServiceNow. Can we get their earnings? Nope, not yet. Come on, Elon. Somebody says Tesla event is 5:30. That's the earnings call, Broseph. The earnings call's at 5:30. The earnings drop at 4:05. Oh! ServiceNow forms partnership with critical manufacturers. Okay. Looks like ServiceNow is starting to trickle in. That's it. Come on, weenie babies! All right. Somebody says IBM beat. Do we really care? Is anybody investing in IBM? IBM, free cash flow, 2.85 billion, beat estimates. Revenue, beat estimate, almost 17 billion versus 16.59 expected. Wow, good for them. AI. Oh, ServiceNow, big beat. Revenue, 3.22 billion versus 3.12 expected. Adjusted EPS, 4.09 versus 3.58 expected. Current remaining performance obligations, $10.92 billion. Q3 guidance is now 3.265 billion versus the estimate of 3.21. It's a beat at ServiceNow. And I do see a green candlestick, which is good. It looks like it was a lot larger. Wow, 1,000 handle there. Is that? Oh, I guess we've hit 1,000 before. So we need to get back to the 1,000. Oh, Tesla's out. Tesla, adjusted EPS misses. 40 cents versus 42. It's a miss, but gross margin beats. Gross margin beats. 17.2% gross margin versus 16.5%. Revenue comes in at 22.5 billion versus the estimate of 22.64. It's a slight miss. EPS is 33 cents versus 42 cents year over year, which also comes in as a miss. Shareholder deck is now out for Tesla. Tesla. So we're gonna go through this and So take a moment to go through the actual deck here. And as I grab that deck, we're going to be taking a quick peek at what we're seeing here. Okay, yep, no, nothing yet. Tesla's up about 1% now. And 1 sec as I pull up that check. Deck. And the deck. Here we go. All right, Tesla's now up almost 2% as you kind of clear this catalyst. And honestly, that margin beat, I really want to know if that includes the credits. That's going to be the biggest deal. But so far, those numbers are a miss, but the margin beats, which that's really what we care about anyway, is that margin. All right, F this stupid freaking thing. It's fine, I'll just do it right here. I'll do it live, God! Freaking technology, God! It's fine. Fine, Kevin. It's fine. Nothing wants to work that. It's fine. It'll slowly work. Okay, so Tesla stock now slipping a little bit. Oh, God. It's now, we're sitting at 0.6. Okay, what is going on here? We got, looking for other updates on it. Q2 revenue, yeah, 22.5 versus the 22.64. And then, there we go. Okay, we got it. There we go. All right, here we go. So this is what I wanted. Seminal point in Tesla's history, beginning of our transition from electric vehicle and renewable energy industries to also becoming a leader in AI, robotics, and related services. I like how they said also. You know, they're not like saying instead of, they're saying in addition to. Robotaxi launched. It is camera only. We believe the approach to economy will allow us to continually improve safety and rapidly scale the network to improve profitability. This is a big deal, right? This is really critical for Tesla because bypassing companies that have done this for years, a la the Waymos or the others, that's a big deal. Cash flow in the second quarter missed big. We only had $146 million of free cash flow. There it is. Let's see, what's the note here? Note 2. Free cash flow, they're just defining what free cash flow is. Huge miss, by the way. We were looking for $760 million, and we only ended up getting 0.146. So really light there on free cash flow. That's probably my biggest concern for Tesla, is that we're going to end up without the ZEV credits, which we still had some ZEV credits this quarter. So it's really, you're not going to see the real meat of it until next quarter. That's when you kind of start seeing the oopsie doopsies. That's, I think, where Elon's really going to have to come in and do some coddling and damage control to really minimize some of the larger stock impact there. But I expect that they're going to be pretty prepared to do exactly that. So I'll write down the expectation right here. 760 mil expectation, 146 mil reported. Despite uncertain macro, unclear, we continue to make high-value investments while ensuring a strong balance sheet. We'll look at that in just a moment. Deliver affordable and compelling autonomy-capable vehicles. I'd love to see progress on the next units, like Q2, right? Megapack, solar, fine. Okay, let's get into some of these numbers here. So gross margin. So here's the gross margin. Year over year, we're down Q2, right? From 18% to 17.2. But look at this. We've actually grown out of this hole, which is really a good thing. So great to see this. Then you've got the EPS over here at 33 cents. CapEx. Here's CapEx, which is quite significant. Compare that to Q2 last year. It is up about 5% from last year. Let's talk about some of their arguments here. Decline in vehicle deliveries, lower regulatory credit revenue. That's going to go to zero, mind you. Uh-oh. This is bad for Enphase as well right here, right? Which we know, like, you can't really touch the solar industry right now. We already know that. But look at this. Decline in energy generation and storage revenue due to lower average selling prices. The price war is taking over. Even Enphase is now reportedly making cheaper batteries to compete better. Oh, Chipotle's down like 7%. That's terrible. Okay. So let's see. Lower regulatory, okay, profitability. Decreased restructuring costs, lower cost per vehicle due to mix and lower raw material. Okay, fine. Growth in energy storage, growth profit. So in other words, better margins, but lower top line. That's interesting. It basically means lower cost. Basically, lower cost of goods sold, which is good. You're not really, it implies less tariff impact, right? Which is good. Gross margin X credits was 15%, mind you. So X credits, still 15%, which is very good. GM was at like, what, 4? Or somewhere between 4 and 7. Okay, well, we'll have to look it up to verify. But these are incomes per vehicle, superchargers, 14% growth. We've really slowed down the growth rate on the expansion of the supercharger network. Remember, Elon basically fired the entire supercharger team, and it really slowed down, in my opinion, a lot of the progress on these, making sure that even existing customers have enough opportunities to charge. So let's see here. Tesla said the first builds of a more affordable model came in June with volume production planned for the second half. What? That must be on this page. We continue to make progress preparing for the launch of additional models this year. Our entire model lineup is better than ever with recent updates. You haven't released a new model. I mean, you've released versions, right? So we've had the extended Y and Juniper, but no new model, right? We know that, but that's what we anticipated. But what's the forecast? Is there a forecast for June? More affordable model came in June. Where do they reference June? 8th millionth vehicle in June. That's great. Refreshed 3. In June, we launched our robotaxi service. Yes, we know that. Why are people referencing June? Oh, here. Including the first build. No! We continue to expand our vehicle offering, including the first builds of a more affordable model in June, which with planned volume instruction with the first build. Wait. We continue to expand our vehicle offerings, including first builds of a more affordable model in June. The volume production is planned for the second half. So what does that mean? Is that like is that the Model 2? Is it like, what is this? I think this is Model Q. Model Q China only, probably. Really need clarity here. Because that's a big deal. Like, remember, I'm a person, I want volume at Tesla. I want as many vehicles as possible. Because I actually agree that a $25,000 car would do really well. But the problem is, I think it's only going to end up being a Model Q. And the reason I say that in China, is the UBS leaked that. So that's not as exciting. Okay, so let's see here. Record test drives up 20% sequentially. That's quarter to quarter. Oh, okay, so that's interesting. Test drives up 20% from last quarter. Politics versus no politics, maybe, right? Is it possible to say that test drives are up in part maybe because of less political involvement? Maybe. Is paramount we maximize the number of prospective customers experience the vehicle? Duh. Shanghai remains our main export hub. Record volumes in South Korea, Malaysia, Philippines, Singapore, Model Y in India. Continue to prepare for the broad release of FSD in China this year. Okay, that's fine. AI, Launched robotaxi service in Austin. World's first autonomous delivery of a customer with a new production Model Y driving itself 30 minutes from the factory across town. Yeah, but remember, this also had, this self-delivery had a custom software stack that they ended up having to disable later. Expanded AI training compute at Giga Texas. 16,000 H200s at Texas, bringing Cortex to 67,000 H100s. That's cool. Vehicle and other software. Yep, more features than it ever did before. We launched the Robotaxi app, which is pretty good. Battery powertrain. Lithium cathode production plants remain on production in 2025. Onshoring of critical materials. We are on course to begin domestic production of our first LFP cells. Energy storage deployments continue to grow as we expand capacity for Megapack and Powerwall to meet demand globally. Collection of businesses, mainly support vehicle sales, also continues to grow. Fine. All right, what happened over here? Gross profit increased sequentially. We started deploying Megapacks. Regionalizing energy storage, fine. Service grew a little bit. That's a low profit item, so I'm not so worried about that. Okay. Inventory rose. Inventory is pretty high right now. So I've got a report here. Inventory is now at 24 days, up from 22 average in Q1. That's the highest in a few quarters. Okay, Tesla would have had negative free cash flow if it weren't for other income. Really? What do we have here? There's always something funny going on. Oh yeah, here. Look at that. $320 million in other income from crypto. No way, dude. That's not cash flow. As a result of the adoption of new crypto asset standards, the previous reported quarterly periods in 2024 have been recast. Huh? So changing the recognition of income or profit, basically. Net cash provided by operations, 2,540. But here's what's this other? 320 of other income. Do they adjust for that here? No, they don't. So that other income, the other income from crypto, does not get subtracted in the cash flow statement. So they're reflecting, it appears, that as cash versus non-cash. That's a little sussy baka. I mean, maybe that's the way to do it, but I'm just saying, like, if your income from operations was 923 mil, and then you propped it up with interest income, less interest expense, plus other, that's a little interesting. Net income, yeah, therefore, after taxes, our net income was 1190. So you're leaving that in as cash income, basically. They didn't subtract it out of the cash flow statement. And as a result, that 2540 number is propped up by 320. So yes, this 2540 number is propped up by the 320 of other, which that 320 of other, we saw the financial note on right here as a result of the new crypto asset standard. So basically, crypto saved Tesla's free cash flow in the last one. Okay. Where are credits? Can we see credits? Yeah, regulatory credits. Here's another issue. Look at the reg credits. These are, I mean, you pretty much have a full quarter here of reg credits, which would end in June. When did the big, beautiful bill pass? Oh, July 4th. No way, yeah. Oh. BBB passed July 4th, which was start of Q3. Q2 shows no loss of ZEV credits. And then obviously 435 million of ZEV credits would disappear. Still 15% gross margin without credits though. The problem is you'd have to take that off of the net almost. So you would basically take 1549 net income before taxes minus 435 for ZEV credits minus 320 crypto income minus, you know, taxes basically. So they paid 359 divided by 1549. They paid about 23% tax. Okay, 1549 minus 435 minus 320 equals times 0.77. Put us about, they'd have about 611 mil net income absent those two items. So like recasting crypto gains there made them some real dollar hollers. Okay, that does prop up EPS potentially in an unsustainable manner. This is why it's really important that we print more vehicles. Okay, that's really important. Okay, how's our cash situation here? So always, please, when you look at this stuff, look at current liabilities. Most shills do not look at current liabilities. Okay, so 30 billies of current liabilities. So we have $30 billion of bills minus 3.2. I don't really count deferred revenues. So I have $26.8 billion of current liabilities. 26.8 billion of current liabilities / bills to pay. Kevin, die better. Sorry. I'm sorry, bro. I need more coffee. Okay. Long-term liabilities, 11.5 billion to pay. And then 11.5 billion long-term liabilities. Cool beans. Now we go look at the cash. The cashola, babies. That's pretty nice, man. They've got lots of cash. $36.7 billion of cash plus 14 in inventory. That's pretty damn good. Prepaids, I usually don't count. Receivables, you could. You've got about 40 bill in receivable in cash. So 36.7 bill of cash plus 3.8 bill receivables. So say 40 mil cash. Plenty of runway here. Plus 14 bill inventory. Sorry, that's $1 billion. So plenty of room above there. What's going on? Oh, it's only down 93 bips. The fact that it's like bobbing up or down 1%, big deal. Dude, Chipotle, what the hell, man? Holy smokes. What'd you guys do? Oh my Lord. Chipotle got whacked. Okay. Back to, let me quickly see what's going on with Tesla. Somebody in the chat's like, Kevin does earnings again? Hell yeah, homie! Your boy me, Kevin's back! And now I'm back from outer space. Okay. What the hell was I doing? I was gonna look at something. and I got distracted by a comment. Found it. Chipotle. Q2 sales -4% versus -2.1% expected for Q2. Comp sales 0 versus the expectation of 0.76. Chipotle Mexican Grill falls 6% as Q2 sales disappoint. Margin comes down a little bit. And so what does Chipotle do? $400 billion stock buyback! Whee! This is literally what rich companies do. Remember this, okay? Rich companies are like, oh, those numbers are bad. Buyback! They always buy back at the worst times. Like, they don't buy back when you're in the middle of a recession. They buy back at the top of the market when you're slightly below the peak. It's insane. Anyway. All right, so where are we? Okay. So that's the balance sheet's totally fine over here. I'm very happy about the Tesla balance sheet. So that's fine. Did we do any financing here? Let me see what's going on. Investing activities. We did some repayments of borrowings. None of this is a big deal. These are sort of nominal. That's fine. I'm not really worried about any of this. How about stock comp? Stock comp did increase a bit, which gets added back into cash flow. So you did have a little bit of a push in stock comp here, which could be as a way to try to like attract or retain AI talent. It's entirely unclear if that's the case, but it's possible. And then we have, what do we have? Oh, let's see. Let's see. Reconciliation of gap. That's fine. We saw 15% credits. Okay, these are deliveries. This is just not a great chart, right? This is the pisser. This sort of like de facto resistance level, right? This is the pisser right here. So, you know, I think that's what, my opinion, that's what we should be focusing on. We should be printing. Get the guy out of this. All right, hold on. I'm gonna use AI here. Okay, you ready for this? All right, this is how we do AI in Meet Kevin land. Hold on, take that. There we go. This is Meet Kevin's AI. We call it old school AI. And if you don't like it, F off. All right. I don't want to see this. I don't want to see that at all. Get that shit out of here. All right. Much better. Now I like the diner. All right, where were we? Okay. Okay, good. Pictures, pretty pictures. Okay, cool. All right, let's do a quick overview of what just happened and give you the breakdown here so that way you can get caught up. So if you just need to get caught up on everything that just happened with earnings, I'll give you that. We still got the earnings call to go, and then we're gonna go through like Google and some of the others. So let's catch you up really quickly. All right. Well, Tesla numbers are out, and there are some really interesting details baked into the numbers that we've got to talk about, including recognizing $320 million of crypto gains that you're recasting from 2024, and some talk about the affordable model, but very little talk about ZEV credits. Going into this earnings call, I was most interested, which we can still get from the earnings call, in hearing what Elon Musk and Tesla's commentary is regarding zero-emission vehicle tax credits. That's because in this quarter, we had a 15% gross margin excluding tax credits, which is great, but we still had $435 of zero-emission vehicle credits that came in. That's because the big beautiful bill passed July 4th, which is technically the beginning of the third quarter, which is to say that Tesla did get the benefit of zero-emission vehicle tax credits for the entire full quarter, and those were represented in the earnings here. Now, most long-term Tesla investors don't really care about these credits, and they look at these credits as something that was bound to go away at some point in the future anyway. The question just becomes, what is Tesla going to go through in the way of a hole while we wait for revenues to appear for robotaxis and the Optimus robot? Those are uncertain revenues, and so of course the big question now is, what do we go through? I'll draw that out for you as we go through some of these numbers. So if we have sort of peak vehicle deliveries here, and then what happens? We push this down with the loss of zero-emission vehicle tax credits. We lose the demand incentive of the $7,500 vehicle tax credit, or the 4K-ish used tax credit, as well as the home residential energy tax credits. We push down our EPS for the corporation. This is the whole, but this is not what most long-term investors in Tesla are looking forward to. What we're hoping for is that we can actually push this up with the benefit of a Model 2 or a Model Q, some form of increase to promote or push up this hole, at least until we get to what, most of us think will be this long-term giant rocket ship of the Optimus program, and then obviously robotaxi. That's the goal. That's the simple goal for Tesla. The issue that we find is we don't have a lot of clarity on this Model 2. We only have a leak from UBS, which suggests that the Model 2 is actually going to be a Model Q, and it will only be for the Chinese market. For example, here we could see Tesla says we continue to expand our vehicle offering, including our first builds of a more affordable model in June, okay, with volume production planned for the second half of the year. The issue with this is the only indication we have of really a new model is the potential Model Q, which would only be dedicated for the Chinese market, which is really an electric vehicle market that was set up by Tesla and is now being competed against. In other words, the Chinese auto manufacturers are directly, with the support of their government, competing against Tesla, which kind of sucks, but it is what it is. Tesla got a great head start over there, and it was obviously, Shanghai was a game changer for Tesla, especially in terms of global deliveries and expansion of the Tesla brand. The broader issue that we have is in the financials during this little hole that we're going through, right? This whole period right here, we don't know what point this is. This point is a question mark. We hope it's 2027, 2028, cyber cabs, robotaxis, whatever. But we don't know. That's an uncertain future. And then here we are, you could argue 24, 25, where we have this uncertainty in terms of deliveries, and we kind of just have to hold our breath between this hole. The concern you want to pay attention to is right here, $320 million. This is a $320 million income addition. And the footnote says that this was as a result of the new adoption of the crypto asset standards, which basically allows them to now indicate that rather than only recognizing losses, they can also recognize income. So they basically went back, changed some of their financials to follow the law, which is fine, but it did give them a $300 million cash gain. And that's because crypto assets could be considered part of their cash balance, which they've got plenty of. The issue with that is when you look at their cash flow, their free cash flow missed substantially. We only had $145 million of free cash flow. The expectation was somewhere around $750 million of free cash flow. And if you remove that $320 million gain, you would have actually had a negative free cash flow read here. And that's only from that $320 million number. If you now also remove the zero emission tax credits at $435 million, yes, we would be substantially smaller on the net income level. We would be about half of the net income we had now. In fact, our net income now was about $1172, so $1.1 billion. Our net income would have fallen to about $611 million. So this is what I talk about when I talk about the hole. I'm not saying that this is bearish for Tesla forever. I'm just saying it's going through a hole, and what you really want to look for are insights from Elon Musk's point of view and his team that are saying, hey, here's what we're doing to get through that hole. We're releasing more affordable models. We're expecting a Model 2 in the US or whatever. That would be great. Unfortunately, really, when we talk about new models, what we find is that the current models are increasing in inventory. Inventory now at 24 days, up from an average of 22 in Q1, the highest in several quarters, frankly. In addition to that, the vehicle that drove itself to a customer's home did have a custom software stack in Austin, which a lot of people looked at that and were like, okay, well, we want this to be in sort of the broader release. Did it have different hardware? We don't know details on this, but this will be a future. I'm excited about that. It'll kill finally, hopefully, that $900 delivery fee or give Tesla some more profit. So, that's cool. Then test drives up 20%. I thought that was interesting because it could be an indicator that Elon Musk getting out of politics, like that negative political weight, is starting to fade. But going back to the models, when we talk about launching additional models, we still really only find that when they say we continue to make progress preparing for the launch of additional models this year, our entire lineup is better with recent updates. Yes, we got the extended Model Y in length, we got the Juniper model, but we still don't have a new model. They continue to tease this new model, But again, per UBS, we think that's going to be China only. If you look at superchargers, you're going to find supercharger growth is really starting to shrink, 14 to 18%. Not ideal. Tesla, though, relatively stable so far. Earnings call could obviously sway this dramatically, but markets were anticipating about a 5% below average volatility move on Tesla. So that we're hanging out here between this sort of 347 line and 318 line. Usually we got to move towards one. If they pull off this earnings call well, hopefully this will just be a clearing event and Tesla can move nicely back to its 347 level. That's the goal for Tesla. Now, keep in mind, I mean, you know me, I'm a big fan of the lines. And this morning, for example, we talked a lot about Rocket Mortgage because people were looking for the next meme name after Opendoor, which I cautioned against investing in Opendoor over the last 2 days because I said the rally was over and it is fizzling like crazy. People were looking at Opendoor and I said, hey, this sucker's probably gonna bounce at 1598. Don't do anything pre-market. Wait to see if you get volume. This is in the Meet Kevin Alpha report. We do it in the pre-market. So when we look at euphoria like this, we could look at a stock and I give you my thoughts on how it might move on the day. If you wanna get access to that, make sure you go to meetkevin.com, use the coupon code, release the files, or AI Boom. They both work. But you can see this incredible bounce here, basically 5 times on the day on the exact line that I talked about in pre-market. So that's one of the big benefits of the Alpha report is you kind of get a heads up on what to expect for the trading day, what lines to look for. And then my goal is to teach you, hey, look for volume to know if these bounces are actually going to hold. That's the whole point of the Alpha report. So make sure you get that at meetkevin.com. Going back to the Tesla Q2 report, we find that we also have this decline in energy generation and storage revenue. Now, this I found very interesting. To me, there's a bit of a price war going on in solar, mostly because energy prices are coming down, whether that's because we're producing more oil and natural gas, or it's because of lower international demand because of tariffs or in spite of tariffs, whatever. We're seeing energy prices come down. And in order for the home battery and solar market to do well, you need tax incentives, you need high utility rates, and you need low interest rates to finance these projects. Unfortunately, we have the complete opposite. We have very high interest rates, not low interest rates. We have falling utility rates, not rising utility rates. And we're losing tax incentives for these batteries and home solar products, which is unfortunately an L that's leading companies like Tesla and Enphase now reportedly making cheaper products to still try to maintain some margin. And this is where Tesla actually impressively increased their margins, but lowered their average selling prices on these energy products to get them sold. Now, the Enphase earnings call will give you a lot more insights into why this industry, like the solar and battery industry, is just a toxic waste basket right now. And it's one really, at this moment, unfortunately, to be very, very cautious of. You really have to have balls of steel to make a bet on the solar industry right now. But it is still impressive that Tesla's able to squeeze those margins. And I like that Tesla's able to push a 15% margin, excluding those credits. Now, we still got development listed here for the Roadster. We've got the Tesla semi-truck in construction along with the Cybercab. So the lines in construction here. You don't see a new model otherwise listed here. And they still indicate a Cybertruck capacity of over 125,000, but it's highly unlikely we're anywhere near that sort of delivery volume. So yes, a miss today. We did have some cool images. Look at all these ladies, these pretty ladies here on their roller skates showing off their 1950s style diner. We've got the hole that we've talked about. We talked about, I don't know if we've hit this yet. Tesla is cash rich right now. While XAI is blowing money, expected to blow about $13 billion this year, one of the reasons Elon Musk is promoting this idea of Tesla potentially taking a stake in XAI is because Tesla is pretty cash rich right now. Even if you net out their current liabilities of $26.8 billion of bills to pay, they still have about $10 billion of extra cash, plus another almost $14 billion, that was $3.8 billion of accounts receivable. So that's about $40 billion of cash, plus $14 billion of inventory. So 40 billion of cash plus 14 of inventory. You're doing really well here in terms of cash situation if you've only got $26 billion of current liabilities and 11.5 of total long-term liabilities. You could literally take all the cash you have and make this company debt-free. And then you could go do the debt scream, debt-free scream, or whatever you want to do. Anywho, this a little funky again with the 320. We've talked about that. But that gives you like an overview of what's going on with the Tesla numbers here. And remember to go to meetkevin.com and use those, release the files coupon code. All right. So now what I'd like to look at is I want to get into some other commentary that we can find, as well as take a peek at this. This is really good. This is relatively stable for, what's it called here? For Tesla and after hours. You really hope that Elon just doesn't screw it up on the call. And I instead of making cars, Tesla's flipping burgers. I mean, this is not untrue. But anyway, yeah, so we've got the earnings call coming up, which is obviously going to be a big deal. Let's see here. Let's see what other comments you have here. I'm literally on my way home to pick up my buddy to pick up his new Tesla as we speak. Well, that's awesome. Good for you. That's really cool. Yeah, I mean, like, I've got like almost all of the Tesla models over Tesla's history. I'm a big fan of what they do with their vehicles. I do think photos of FSD in London in front of Big Ben. Honestly, I see some of these things. I purposely don't really care because I think like that's already built in, man. It's like, hey, you can now have FSD in London. Why couldn't you have had that a long time ago? Is my question. You know what I mean? Like I'm not trying to poo-poo on what you're saying. I'm just like, it's not critical to Tesla right now. What's really critical to Tesla is manufacturing. Do what you're good at. Make more damn cars. But who am I? I'm just a YouTuber, boys and girls. I make YouTube videos. I sit here and scream and break my lights while I'm at it. I'm gonna have to tape it up. Oh well, what are you gonna do? Well, what we'll probably do is we'll go through the Google earnings in just a moment here. The Google earnings, pitching growth on search again. That's mission. Like as soon as they start showing negative on that, it's gonna be a big pooper doopers. But everybody's waiting for it. It's just gonna take a while. I mean, I said 2 years ago it's gonna be years before you see it, but it'll come. It'll just be a matter of time. Wow, dude, Chipotle is now down 10.9%. Holy smokes, bro. What are they saying? What could you possibly be saying at Chipotle? Oh, Tesla just gained the lead again.
Gained the lead.
Okay, no guidance, by the way, for Tesla. Kind of remove that. Where is Chipotle? Oh, here we go. Honey chicken is included in 1 out of 4 orders. Consumer environment is driving guidance cut. Well, that's not good. Cuts outlook on traffic slump despite free burritos. Why are you giving burritos away for free? The burritos at Chipotle are great. Don't give away the burritos. Whatever. So, all right. Okay. All right. So, somebody says Chipotle blows short it. Ouch. Salmonella is back. Hell yeah. When is 24-hour RuneScape stream? That'd be sick. I love RuneScape. Chipotle and Canada are packed. When House Hack earnings call? I think when we figure out when we want to announce our Well, we've been talking about this for the past few days. Like, it's not a date that's set yet, but what we want to do is we want to do like a big corporate update on what our game plan is for timeframes with AI. But we want to give realistic expectations of timeframes, because I don't ever want to be in that place where we're doing like, 2 weeks, bro, 2 weeks, and then it's like 2 years, right? So whenever I know, we'll tell you, but we don't have it scheduled yet, but we're working on it. Okay, cool. So that's done. Let's see here. Mike Smith says, dude, Kevin, you look like a bum. Thanks. That's my goal. It's literally my goal. I'm trying to go for the bum look. And if you don't like it, suck it. All right, good. So now let's get into Google earnings, because I think Google is going to be interesting. So we're going to go to Investor Relations Google. And let's pull up the sheet, earnings release. So let's see what we have here. So Google, consolidated Alphabet revenue, constant year-over-year, robust momentum across the business. Google search, this is key, critical. Standout quarter. Let's see here. Okay. Let's see here. Okay. Hold on. Okay. Good. Okay. Give me 1 sec here. Let me make sure this is good, and we'll move over. That's that. How about... Okay. That's set. Give me like 30 more seconds here, because I want to put this in here. There we go. Okay, cool. And then remember, the earnings are going to be in about 25-ish minutes. I wonder if the Doomers are talking about Tesla at all. I saw a note that I think Ross was on Doomberg. And there's a note here that says, Ross says Tesla is a declining business. That's the highlight that came through from the interview. At least that's what the Newswire says. I'm of the mindset that we're going through that slump hole. You know, that Tesla is actually a growth play that's in a trough, right? Like, I think that's a big deal. Okay. There we go. All right. Dun, 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 dun. All right, cool. Now we're here. So Google Services revenues increased 12%, which is great. But everything together. Let me see if I can get segments. Yeah, here. This is what I want. Look at that. That's just juicy. Let's download this so we can write on this. So the Google earnings numbers, they make money. And I'm glad they're saying YouTube's doing really well. Obviously, I'm a little biased on that one. But I love to hear that. Okay. So we have... Okay. Net income. Segments, there it is. Segments. Google Services. This is for the quarter end. Google Cloud. Hedging bets. It's so interesting to me that they lost $112 million on hedging. Now, in fairness, they made $102 million last year. But that's interesting. Google Cloud. Wow, look at that growth on cloud. Yeah, holy smokes, right here on operating income. Bro, the margin. That's really nice. And their margin's starting to explode over here because they're starting to scale. So this margin is scaling here. Can we get, where was the YouTube breakdown? We just saw that here somewhere. Do they? Oh, maybe they don't. Okay, here are revenues by region. United States. United States is still representative of over half of their income. 46 divided by 96 is almost half of their income. 48% US. That actually shows you how international this this company is. Wow. That's huge. Here are the hedging losses from FX. So does that make you a hedge fund manager? Okay. Here's the cash flow statement. Whoa, look at those purchases. That's year to date. Here's the quarter end. $22.4 billion. Bro, we're spending twice as much money on plant, property, and equipment than last year. Twice the spend from last year. You know, on pace, right? So, pace. That's insane, man. Yeah, because look, this was 6 months. That's 3 months, right? So I'll make a little note. That's 6 months. Let's just lower that size here. That's 6 months. That's 3 months. So it's not quite twice the pace. So I'll say, you know, almost. Almost 2x the pace of spend. That's pretty impressive. And then cash generated by operating activities. You can see the cash generated is actually only up a smidge. So you're not really getting a return on those investments yet. 27,747 divided by 640 is 4.1%. So 4.1% increase in net cash gen, but a 22,444 divided by 13,186 is 70% increase in cash spend. 70% increase in year-over-year cash spend on PPE. PPE, plant, property, equipment. And then if I go for the year-to-date, 39,643 divided by 25,198, about a 57% increase. All right, I'll say 57% increase year-to-date. Wow. That's a lot. That's a lot of spending. Yeah, and they're increasing their guide on CapEx, exactly. Okay. So, all right. Okay. 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 Oh, it's exhausting. So, I need more coffee. Revenues. That's pretty nice. You got to give them credit here. That's a really nice boost in top line revs. Not necessarily cash revs, but those top lines. That's about it. That's not like, you know, that's a 13% boost right there. And then what's their G&A? 27,425 divided by, well, new number divided by old number. 14%. It's totally reasonable. This is in line, so we don't have like a leverage issue, like an operating leverage issue. Like you're growing your OPEX with your revenues. That's fine. Cash quiz, plenty of cash rich, baby. Current liabilities, you've got deferreds. We do have a lot of bills to pay, so maybe not that cash rich. I've got call it $82 billion of bills to pay. And I have, I got plenty. I got 95 billion of basically cash plus another 55 of receivables. Oh, they got plenty of cash. So, 82 billion, current liability, 95 bill, cash, plus 55 receivable, plus others. They're fine. Yeah, they're doing totally fine. There's really no issue here at all in their balance sheet. And let me tell you something about the balance sheet.
Kevin is much more interested than most people, by the way, in the balance sheet.
Yeah. So, that's good. Margin, stable, net income increase. Cloud. This is critical right here. 32% increase in cloud. Wow, it's really nice. It's hard to poop on this. Here we go. Here's the YouTube. 9.6 divided by 8.663. 13% increase in YouTube. Okay, that's stable with their top line. And then search, I am very skeptical of this. And what's the other? But 11.7%. 11.7%. And then subscriptions blew up. And then here's Google Cloud. How much did services go up? Well, I guess subscriptions rather. That would be 11,203 divided by 9,312, 20%. Wow, nice. Very good. Yeah, I mean everything here. This is exciting. How's the stonk doing? Tesla's still up 1/3%. Google's up 2.4. Coming up to that 194 level. Which we talked about, even before the market closed. So that's good. I'd say what the surprise right now is that Tesla is like literally in no man's land. And it's done nothing since the close. It's basically done nothing all day long. It's almost like the most anticipated set of earnings ever. Broadcom is running. I think Broadcom is running because of the news from Google. But you're right. They're up about, because it aligns with earnings here. Not necessarily. I mean, I think broadly, the company's done very well because just most of these AI plays have done exceptionally well. Okay, Chipotle is testing a new side that could launch in the second half. Boys and girls, we're getting a new side. A new side. Let's see here. All right, what else? Insignificant 50-cent move by time. Exactly, yeah. That's exactly how I feel, yeah. So we've got, let's see here. Kevin, were you invited to ride the robotaxi in Austin, but you didn't tell us? No, I didn't get invited. I don't get invited because in my opinion, I focus on that hardcore middle. And it's not what people want. People want to invite the shills, man. Like, do you think you're going to get invited back to an Apple event if you dump on them? Of course not. You'll never get invited back. So you can't dump on them if they invite you. And if it's honestly good, you should say that. If it's honestly bad, you should say that. Okay, what else do we have? Let's see here. Just own NVIDIA, and that CapEx becomes revenue for your other positions. Lol. I mean, kind of, honestly. And then the investors see it as, you know, a profitable expense over here to make money in the future. I don't know. We'll see. So why do people not like Ross? I'm just looking at some of these comments here. Okay, I'm gonna run a poll, okay? Do you like Ross Gerber as a person? Ignore politics. If you can. Okay. Yes, I like Ross. And then, no. I'm just curious. No, I don't want... because I see these comments all the time, and I'm just very curious. But, because I always think he's got great perspective. You know, it doesn't mean that you have to agree, right? But... listen to what somebody else here says. The new side is mayo. Yeah. Will you be going to the Tesla Diner? Eventually. I will probably let everything chill a little bit. Eventually I will go there next time I'm in LA. You know, maybe in a couple weeks or whatever. I'm not like I need to be there first, kind of. Just make a video shilling Apple. I tried that and I didn't get invited. No, but I was also reviewing something I did like. Apple sends the FBI to watch you? Yeah, probably. Okay. Okay. All right, cool. So, next. We have Broadcom. We have Google. Google did great. Oh, look at that. They're popping even more now. QuantumScape had their earnings. There's not a lot of volume here, so it's hard to say. I mean, I see that it's up 3, but the volume's so low, I don't think it matters. Mattel, I don't think anybody's really paying attention to Mattel. It's been sideways forever. Probably a little bit of a tariff risk here. After hours on Qs are up nicely because of Googs. Oh, look where we're going. Oh, snap-a-rappas. And then we have, yeah, NVIDIA doing great here on this CapEx expansion from Google. So great news. And okay, I'm going to end the poll in about 30 seconds. So get your final votes in. All right, let me see what they're saying here about the EU deal.
Here to move up in line as well. What does our reporting indicate about how close we could be to an announcement with that trading bloc?
Well, what we understand is that talks have really picked up between the U.S. and the EU, and they are progressing toward a deal that would see tariffs of about 15% placed on most European goods. Otherwise, the bloc would face tariffs of 30% coming due essentially August 1st under Trump's latest threat against the European Union. European negotiators are optimistic they can reach this deal, although we understand that the situation is fluid and nothing is imminent. Even so, the European negotiators have obviously developed a set of countermeasures just in case they are slapped with tariffs anyway. They are planning to potentially target some $106 billion of U.S. goods, specialty products, planes, cars, bourbon, and the like. Right now, the discussion is focusing a lot on potential exemptions for, as the Treasury Secretary mentioned, automobiles, as we saw Japan got yesterday in its deal with the U.S. The European Union is also pushing for special exemptions on other sectoral tariffs, including those for steel and aluminum, as well as pharmaceuticals. One interesting thing to note, this deal that is emerging with the EU and coming together, like we saw with Indonesia, could include exemptions for products that just aren't made in the United States. We're talking about special machinery and generic medicines there.
I wonder if they planned this AI conference to be at the same time as the Elon earnings call on purpose. Nah.
Full of swing districts, including one high-profile seat in New York.
Mike Lawler, Mr. Salt.
Oh, yeah, okay. Let me change this here. Okay. I need to... SWAT! Police SWAT action at home in Oakland, California. What a surprise. It's not actually really much of a surprise. But it does look entertaining. Look at that. Ooh. The random things going on in the world. Alright. So... Alright, let's end this. Alright, so y'all are like 50-50. Which is really interesting. Okay, good. So... Which is kind of almost like perfect.
Re-election and not to run for governor.
Nice balance, you know?
The idea here is you made clear you're well positioned to run for governor in New York, but it seems you might be more valuable to Republicans in Washington. Did President Trump ask you to stay here in D.C.?
Well, look, over the last 6 months, I have, weighed this decision and really went through my own process to make a determination of what was best ultimately for me, my family, my district, and New York.
Dude, I really despise hearing
he
from this
can
guy. He
have
sounds
a
so
headline
political.
tomorrow that kills shorts. So that's what you always have to watch out with Tesla on the short side.
All right, let's get more on these earnings moves. Bring
Kill
in Gene
shorts.
Munster, managing partner at
That's a
Deepwater
threat.
Asset Management. Gene, great to see you.
Oh, here you go. Tesla shill, baby. Let's hear it. Let's hear only the upside.
About 3% here. What happens? What's happening on the call?
Well, the
call's
call's been
not
all
open yet.
about AI, and this would have been the quarter we would have seen a crack in that search. Keep in mind the GPT users went from about 300
Oh, they're talking about Google.
dailies 3 months ago to 500 million. We've just seen this accelerating use of ChatGPT, and that really kind of got the narrative going. I'm very much on board with this idea that search is under attack. And
Yes,
this would have been the quarter
it
we
is.
would have seen a crack, and the crack would have been a fractional miss in the search business. Instead,
Not yet.
what we saw was search growth actually accelerated. I mean, it was fractional, 11%-ish versus 10%-ish in the March quarter.
Yeah, and that could also be just more people advertising right now, not necessarily search growing. That would be a difference. More people advertising versus search growing. Be curious to see if you can get granular data on that.
Apple, Eddie Q was talking about this decline in search within Safari. It would be hard for me to have imagined that paid clicks are going to be up 4%. So when I put all this together, Melissa, somebody like myself who's been bearish over the last 6 months, I'm in the camp that this stock is probably going to move meaningfully higher over the next few days, 5-10% higher, in part because we should have seen something this quarter, given everything that's going on. And what the underscores is
I don't know
this.
about that. Because you also had the resumption of the post-tariff sales, consumers still spending money because they're worried about tariffs, the pre-tariff sales. I don't know how I feel about that. I kind of disagree with that. I don't think it's something you see now. I think it's something you really worry about between now and 2030. It's going to take a while.
You're going to wait for another data point or another data point.
It's going to linger. In part is, so they gave the metrics around how much is in the usage in AI mode. They're at 100 million monthly active users. So that compares to about 5 billion monthly active users for search. They haven't started the monetization. So on the call, they're talking about starting to feather in some more monetization with AI mode. Undoubtedly, they're doing that. But I was listening to Steve's comments. Steve, I was tracking what you were saying about the clicks, and ultimately, just adding monetization to AI mode doesn't necessarily mean that people are going to click on that if they just get their answer. And so I think to answer your question, Melissa, is that there's going to be a relief rally in this. And it may go on for days, it may go on weeks. But this narrative around how does Google navigate AI isn't going to be solved until investors can actually see how they have integrated these sponsored opportunities within AI mode.
Yeah, and Gene, it's
right, because the big money maker now is getting people to click and go to your website, buy a product, make a phone call, research your service, read your blog, read your news site or whatever. Google search is just a really good tool for discovery right now. You know, finding almost purposefully non-AI stuff. It's just what I find myself doing sometimes when I'm like, I don't really want an AI answer here. I want some Google research. Like if I need, you know, if I'm reviewing, I don't know, some Supreme Court precedent or whatever, you know? It's like sometimes just going and getting the sources is really nice. And Google Scholar is still good for that.
40 billion of kind of economic value from that arrangement from Apple. And so that's rarely talked about, like how could Google negatively impact it? Because the general thinking is that if they get displaced, then people will just naturally come back because it's so habitual. But there would be a step down. It would be material. We're talking 15, 20% of kind of operating income hit. Search 55% of revenue, 70+% of earnings. It would be a material impact.
Gene, I want to get your quick take on Tesla's quarter ahead of the call.
We talked about earnings operating income down 42% year over year. It was bad, but the reason why the stock hangs in there, they have a chart in their investor deck. They don't give the exact numbers, but you can kind of eyeball it. They added about 1.2 billion miles driven by FSD. That compares to about 600 million in the March quarter. So basically doubled quarter over quarter in terms of those miles driven. That's all plays into the narrative about autonomy is the future. And when you show some of those data points, it's hard to, you can debate how much time investors are going to give them, but it feels like things are really moving. That affordable model, they reiterated their time frame on that, but no one really expected it to be on time. So that was a net positive.
All right.
That's fair.
Gene, thanks. We'll check in with you a little bit later.
I mean, that's if we actually get that affordable model, which might just end up being China. So I'm a little nervous about that. I'm hoping it's not, but it's quite possible. So we shall see, I guess. All right. So what do we have? We have 12 minutes to the earnings call, which I'm excited about. And then, let's see. Let's go into Mario Kart miles. Who's getting the Nintendo Switch 2? Who's gonna get it? Okay. Tesla. Yeah. Tesla business is in decline, says Ross Gerber. Okay, we have about 12 minutes to respond, to react to this. All right, let's go pay our dues. How do I make this pop out? Pop out. I want it to be a pop-up. Ah! Ooh, I don't know how to. Huh. Okay. Maybe I can... Wow. There's no pop-out feature. That's a shame. What if I just zoom in? That's what we'll do. Just zoom in a bunch. Is that the way to do this? Well, I guess so. Alright. Fine then. This is crazy. Stand by. We will get this working soon. We just have a slight technical difficulty here. Alright. Now... Next thing we have to do is turn my NVIDIA floating head tool on. Click. All right, NVIDIA's floating head tool's on. All right, here we go. Y'all ready? Let's see what Ross Gerber has to say about the Tesla earnings call. Well, actually, not the earnings call. The earnings call hasn't happened yet. The earnings call happens in 11 minutes. So, not that. Okay, here we go. All right, here we go. Oh, my camera still doesn't work. Why? It says it should. That's ridiculous, bro. Literally, it says it's supposed to work. It's not working. I want to see it. Oh, whatever. I'll just hit play on it so we can get to listening to it.
On this stock right now, when you look at the results, what do you pay attention to today?
Well, there's the sort of reality, and then there's the medium term, and then there's the hope of the long term. And the reality is that business is in decline. I don't think we need any more evidence that their traditional EV and energy business is in decline. And it's really sad, you know, and it is mostly related to Elon's, you know, interesting way of marketing his vehicles, which has turned off most of the people in the world. And we're just seeing, sadly, a continued decline in the business. You know, on the medium term, you know, we hope that maybe things will get better, but the truth is everything's going against Tesla once we get past this next quarter, which your previous guest was just discussing the fact that in a month and a half the credits go away, and Tesla's going to enter a new reality where it's going to be much more difficult to sell cars just because of the pricing. And then on the long term, what Elon and what the Tesla bulls really want you to focus on is the opportunity in robo-taxi and robots, which obviously is a long time into the future and hard to quantify.
Yeah.
And so as long as you keep looking really...
This is something that I look at as well, where I do say, hey, one of the issues we have with Tesla is we have this hole that we have to get through. We have to get through this hole of we don't have a lot of new models. We don't have the catalyst to keep up demand right now. We don't have, in terms of not only solar or energy credits for your home, but also the EV tax credits on new and used vehicles, like $7,500 for the new, right? So these are problematic, and so yeah, you do have this hole to get through. We were hoping the Cybertruck would have been like a bridge to get through this. Now we're like, all right, it's not going to be the Cybertruck. That's not the bridge to get through this. So it needs to be something else.
Really far ahead, you can kind of try to find some positive here, but if you're looking at the short and the medium term, it's not really that positive of a story.
Well, let's look at what's happening right now, which is free cash flow. For the period, Tesla says second quarter free cash flow was $146 million. Analysts were anticipating $760 million. That's quite a huge difference, and it's also a drop-off from $664 million in the first quarter. Does Elon Musk care about free cash flow? Do you, as an investor, care about free cash flow?
Well, everybody cares about free cash flow.
Yeah, exactly.
If you look at your own checking account, right? So
yeah.
Free cash flow is an important metric, and Tesla has been a highly profitable company in the past with great margins if you just go back 3 years. So, yeah, these are all problematic. Any way you want to slice these financials, and I still think many of the earnings estimates for next year are fantastical at this point when you add in the lack of regulatory credits, the higher pricing of the vehicle, and the general negative sentiment of the business. The idea that Tesla's going to sell, 20 or 25% more cars next year, I think is somewhat fantastical as well. So, as I said, I love Tesla as a business. I care about the EV business, and I care about climate, and I'd love to see Tesla selling, tons of cars and being wildly successful, but they're just not doing what they need to do to sell vehicles.
Ross, out of earnings, we're also seeing the Cybercabs scheduled for volume production starting in 2026. Now, we don't know whether that's January or December 2026, or whether it even matters if there's a month put down, but let's say it's early 2026. Is that early enough to meet and beat Waymo?
Well, the answer to this is still yet to be determined, but I would argue at this point Waymo is well ahead of Tesla. Let's be real, Tesla Cybercabs don't work yet. They have safety monitors in it. They're still mapping. So they're kind of where Waymo was 2 years ago.
I mean, in fairness, I agree with the safety monitor argument. That's a good point. However, once they kick those safety monitors out, there's a good shot Tesla could really expand fast. That's going to be really interesting.
Waymo was doing the same thing here in Santa Monica with people in the cars, and they were driving around mapping everything. And so if you just extrapolate out a similar timeline, Tesla's several years behind Waymo, and whether they can catch up or not is yet to be determined, because I don't think their software-hardware combination is going to be good enough to work and scale, and that still is yet to be proven. I could be wrong, which I hope I am as a Tesla shareholder, but I think Tesla's going to have a lot of problems, and so the Cybercab will be important for them because they'll have to have different types of hardware on the Cybercab to really get it to work. And so if they launch a new vehicle, they can embed that new hardware in the vehicle. But it still comes down to people want to drive cars. I don't think they're expanding the market for people ride sharing, and people want their own.
That's an interesting argument as well that we really have to consider is even if the ride share, like we expand Tesla ride share throughout the country, are more people going to use robotaxis? Personally, this is just my point of view. I will use a robotaxi exclusively if I can. I don't like getting into an Uber and then worrying that they're gonna have their AC off, or they're gonna drive with their windows down, or they're gonna be yapping on the phone, or they're gonna try to sell me God, or they're gonna, shill me Open Door. Like, I literally on Sunday had an Uber driver, a Lyft driver actually, shill me Open Door. And I'm thinking to myself, I've been talking about Open Door as a momentum stock for about a month to my course members in the Alpha Report, which remember you could use coupon code release the files to get access to that. And Monday morning, I'm like, guys, today might be the top. It was the freaking top. The top of the market when they start shilling. I don't want that. I want to go, although maybe it was a useful signal. I want to go into a robotic car and not have to deal with that though. Not with my family.
Vehicles, and Tesla needs to come out with a lower price vehicle. This is crucial to their success long term in markets like Europe. They need a small, low price vehicle. They've been talking about,
which tentatively they will release just in China, the Model Q.
About it, they promised it, they teased it, and Elon's just kind of like pushing you down this robocab route because he can't sell cars.
We're getting some more margin information. So the second quarter automotive gross margin ex regulatory credits was 15%. Earlier we had a gross margin come in at 17.2%, which was better than the estimate. Do these kinds of margins excite you as a shareholder, Ross, in the sense that they are at least better than they were and the ex regulatory credit mightn't be as bad as some feared?
Well, I mean, we used to brag about having 20% margins on the car. So, I guess any margin at this point is pretty good for Tesla. So,
I mean, we used to brag about 30% margins.
No, I don't parse numbers that, how would I say, close. The way I look at it is the overall trend of the business is down. And that is the real troubling issue. Whether it be margins or sales or whatever metric you want to use, the overall arc of their core business is down. And to hope that robo-taxis are somehow going to replace EV sales as the core of Tesla's business is a long time coming, and probably not a reality ever. If you look at the size of Uber's business, I would rather be Tesla than Uber any day of the week. Like, if you actually think about it, like logically, would you rather be Tesla selling $100 billion worth of vehicles at a 15% margin, or Uber with a ride-sharing business with much lower margins and an extremely difficult set of circumstances? So, I still think Tesla should focus on its core and refocus on improving its image and with consumers, because people still want Teslas and they're still buying Teslas to some degree.
I think that's happening, by the way. I do think, the increase in test driving, I don't know, maybe that was by design, but I think the increase in test driving that they talked about in their reports, 20% sequential, so quarter-to-quarter increase, is a sign that Elon leaving the political sphere is a great thing. And people are like, all right, we're willing to come back. This is good. So I'm a fan of that. I'm not a fan of political involvement while trying to grow a business. Sort of like, with House Hack, there's so many things I feel like I want to do in life. But the number one thing is to create the Berkshire Hathaway style company, like the next Warren Buffett style company of the future. Especially now that Warren Buffett stepped down, we need somebody to fill the shoes. And so we think that starts with like a really solid core of an asset base that you build off of. And then, hey, we launch an AI project, it'll work or it won't work. But it's not going to take away our core or affect our core. And politics has a way of really screwing with the core. And so I do get nervous about that, but I am happy to see Elon sort of, at the moment at least, step back and chilling out a little bit, which is good. Earnings call coming up momentarily. It is not up yet.
Question and one follow-up.
Oh, here it is.
Please use the raise hand button.
They're reading their disclaimer now. Here we go.
Before we jump into Q&A, Elon has some opening remarks. Elon?
Thanks, Travis. So we've had a very exciting quarter. We're able to successfully launch robotaxi, so providing our first drives with no one in the driver's seat, with paying customers in Austin. And as some may have noted, we've already expanded our service area in Austin. It's bigger and longer, and it's going to get even bigger and longer. We were expecting to really greatly increase the Austin service area to well in excess of what competitors are doing, and that's hopefully in a week or so, couple weeks.
Yeah, a couple of weeks.
A couple weeks or so. And then we're getting the regulatory permission to launch in the Bay Area, Nevada, Arizona, and Florida, and a number of other places. So as we get the approvals and we prove out safety, then we'll be launching autonomous ride-hailing in most of the country. And I think we'll probably have autonomous ride-hailing in probably half the population of the U.S. by the end of the year. That's at least our goal, subject to regulatory approvals. I think we'll technically be able to do it. So, assuming we get regulatory approvals,
that'd be huge.
Probably addressing half the population of the U.S. by the end of the year. But we are being very cautious. We don't want to take any chances, and so we're gonna go cautiously. But the service areas and the number of vehicles in operation will increase at a hyper exponential rate. Some other notable things. Model Y in June became the best-selling car in Turkey, Netherlands, Switzerland, and Austria. It is, I believe, the best-selling car of any kind in the world still. Autonomy is a big factor there. So even without supervised, even with just supervised self-driving, it's a huge selling point. And it's worth noting that we do not actually yet have approval for supervised FSD in Europe. So our sales in Europe, we think, will improve significantly once we are able to give customers the same experience that they have in the US. This is, I think, a very important point to convey. And we've been working with our main country regulator, which is the Netherlands. And I think we're close to getting approval with the Netherlands. Then it's got to go to the EU. It's quite a Kafkaesque. In fact, Kafka had no idea that something like the EU could exist. Beyond Kafkaesque challenges with bureaucracy, but we will get the approvals, and I think we'll get, so people in Europe will have an experience similar to that of the US. In most of Europe, this year, hopefully, at least partially in this quarter. And then we also have some regulatory challenges in China, which we're hoping to unblock shortly, because we also cannot provide supervised FSD in China currently, but we hope to unblock that soon. And that's another major. It really is the single biggest demand driver. And then within the U.S., as we get confident about safety in different geographic areas, we will loosen up on how much somebody has to be laser focused, to have their eyes laser focused on the road. Because that's been a common complaint. In fact, it does create an odd safety issue where people will sometimes disengage autopilot, then do something, change the radio, or maybe look at the phone, drive with their knee, and then re-engage.
Very common.
Which obviously is less safe than simply keeping autopilot on.
100%.
So anyway, we're get that experience will improve in the next several weeks. Because of our focus on Austin with no one in the driver's seat, the production release of autopilot is actually several months behind what people experience on a robotaxi in Austin. So now we have the robotaxi in Austin launched. We'll be adding back those elements so that there will be a step change improvement.
That's huge. It basically means FSD is going to keep getting better. I'm excited for that.
This is really, as you can tell, this is very much sort of autonomy is the story. Like we need the physical product, without which you cannot have autonomy. But once you have a physical product, you need the autonomy is what amplifies the value to stratospheric levels. We also launched the Tesla Dyna, which has been a huge hit. It actually got worldwide attention, which is unusual for a Dyna. Dynas don't typically get headline news around Earth. But this is a pretty special Dyna, and if you're in the LA area, it's worth visiting. It's sort of a shiny beacon of hope in an otherwise sort of bleak urban landscape, frankly. So it's really quite a lovely experience. Great job by the Tesla team there. On the full self-driving front, just continue talking about that. We're continuing to make significant improvements just with the software. So we're expecting to increase the parameter count. Actually, at this point, we think we can probably 10x almost 10x the parameter. Yeah, roughly 10x the parameter count. So this is actually a very tricky thing to do. Because as you increase the parameter count, you get choked on memory bandwidth. But we currently think we can 10x the parameter count from what people are currently experiencing. That's so not just a 4x, actually 10x increase in parameter count. Yeah, so there's still a lot of improvement on the existing hardware to happen. Energy is growing really well, despite headwinds from tariffs and spare supply chain challenges. The Megapack is expanding capacity quickly, and we have upgrades to the Megapack that will make it even better. And we had record Powerwall deployments again in Q2. So I think batteries are just going to be a massive thing. The scale of battery demand is, I think, not that many people appreciate just how gigantic the scale of battery demand is. The way to think about it is that the U.S. sustained power output for the U.S. grid is around 1 terawatt. But average usage is less than half a terawatt. If you add batteries to the mix, you can run the power plants 24/7 at full capacity, thus more than doubling the energy output per year of the United States, just with batteries. But that's again. Big deal. It's a really big deal. Optimus. So we're evolving the Optimus design and really getting Optimus to the point where it is a phenomenal design. So we're on Optimus version 2 right now, sort of 2.5. Optimus 3 is it is an exquisite design, in my opinion, and will be an incredible. As I've said many times before, I predict it will be the biggest product ever. It's a very hard problem to solve. You have to design every part of it from physics first principles. There's nothing that's off the shelf that actually works. So you've got to design every motor, gearbox, power electronics, control electronics, sensors, the mechanical elements. We've also got to train Optimus to use its lens and its sensors with a neural net. But we'll be applying the same techniques that we've applied for our car, which is essentially a four-wheeled robot. And Optimus is a robot with arms and legs. So the same principles that apply to optimizing AI inference on the car apply to Optimus, because they're both really robots in different forms. And Tesla, it is important to note that Tesla is by far the best in the world at real-world AI. Like a clear proof point for that would be if you compare, say, Tesla to Waymo. Waymo's got, the car is festooned with God knows how many sensors. And yet, isn't Google good at AI? Yes, but they're not good at real-world AI. Thus far, they have. Ooh. Tesla is actually much better than Google by far, and much better than anyone at real-world AI. And by far, Tesla has the best inference efficiency. I think a key figure of merit for AI is what is the intelligence per gigabyte? And people talk about parameters, blah blah blah. But I think we'll stop talking about parameters and talk about gigabytes, because with the parameters you can have 4-bit parameters, 8-bit parameters, 16-bit parameters, but the actual constraints in the hardware are how many gigabytes of RAM and how many gigabytes per second can you transfer from RAM. Therefore, it is not a parameter constraint. It is a byte constraint. And Tesla has the highest intelligence density of any AI by far. And I have a lot of insight into this with XAI. The XAI is, Grok is the smartest AI overall, but it's Grok 4 is a giant beast. Sort of at the terabyte level. So it's kind of important to note Tesla has the best intelligence density. And intelligence density will be a very big deal in the future. It is now.
Someone in the chat says cars aren't Transformers.
So with Optimus 3, which is really the right design, it's like it doesn't have, at this point, there's no significant flaws with the Optimus 3 design. But we are going to retool a bunch of things, so it'll probably be prototypes of Optimus 3 end of this year, and then scale production next year. We're going to try to scale Optimus production as fast as it's humanly possible to do so, and try to get to 1 million units a year as quickly as possible.
It's a bit of a setback there. Bit of a setback compared to what we
get done in less
previously
than
heard.
5 years. That's my sort of, I guess. That's a reasonable aspiration, is 1 million units a year.
5 years is where I am too.
5 years.
That's fair.
It seems like an achievable target.
Yep. Agreed.
But in conclusion, so far 2025 has been a very exciting year. A lot of major milestones. We've made clear, demonstrable progress in autonomy that a lot of naysayers said we would not achieve. But it's worth noting that we have done what we said we were going to do. Doesn't mean we're always on time, but we get it done. And our naysayers are sitting there with egg on their face. So great progress by the Tesla team. I do think if Tesla continues to execute well with vehicle autonomy and humanoid robot autonomy, it will be the most valuable company in the world. It's a lot of execution between here and there. It doesn't just happen. But provided we execute very well, I think Tesla has a shot at being the most valuable company in the world. Anyway, obviously, I'm extremely optimistic about the future of the company. Best way to predict the future is to make it happen, and we're making it happen here with the Tesla team. So I'd just like to say thanks to all of our supporters, and I think we've got an incredibly exciting future.
Great. Thank you very much, Elon. And Deadlock has opening remarks as well.
Travis, as Elon mentioned, Q2 was an interesting quarter in a few respects. We started ramping up the production of the new Model Y at all our factories. We rolled out our robotaxi service in Austin and delivered a car completely autonomously directly from the factory to the customer's home. It is a seminal point to get to this thing. I mean, it took a lot of effort, and I really want to thank everybody at Tesla to make this happen. It wasn't an easy thing to do, but we did it. It took time, but we've just begun the next phase for the company. The one big bill has a lot of changes that would affect our business in the near term. The first among those changes is the repeal of the IRA EV credit of $7,500 by the end of this quarter. Given the abrupt change, we have limited supply of vehicles in the US this quarter, as we are already within lead times to order parts to build cars. We've rolled out all our planned incentives already, and we'll start paring them back as we start to sell. If you're in the US and looking to buy a car, place your order now, as we may not be able to guarantee delivery for orders placed in the later part of August and beyond. The bill also made changes to certain emission standards by reducing the amount of penalty to zero. This in turn will have an impact on the new sales of regulatory credits to other OEMs, and in turn will lead to lower revenues. While we've never planned our business around such sales, it will nonetheless impact our total revenues going forward. On the automotive product portfolio, the entire lineup is updated. Globally, we're seeing an increase in the number of test drives. We started the production of the lower cost model as planned in the first half of 2025. However, given our focus on building and delivering as many vehicles as possible in the US before the EV credit expires, and the additional complexity of ramping a new product, the ramp will happen next quarter, slower than initially expected. One thing which is grossly underappreciated, and Elon talked about it, is that all our vehicles in the lineup are capable of autonomy. This is by far the biggest differentiator between us and the competition. Our vehicles top safety standard as is, but with FSD, they are and will continue to set a new standard for safety within vehicular transportation. We published our vehicle safety report earlier today, and you can see a car on FSD is 10x safer than a car not on FSD. We've started seeing an uptick in FSD adoption in North America in recent months, which is a very promising trend. And just to give you perspective, since the launch of, since we moved to version 12 of FSD, we've seen the adoption rates really increase. We've started seeing on the automotive revenue front.
What did he just say about the other model? We're gonna catch up on this, okay? So we're gonna go back really quick, and then what we're gonna do is we'll catch up at like 1.25. But that's important because it just tanked the stock. So let's go back like a minute here.
In the lineup are capable of autonomy. This is by far the biggest differentiator between us and the competition. Our vehicle's top safety standard as is.
Let me go a little more.
By reducing the amount of penalty to zero. Not
Here,
be able to
what's
guarantee delivery orders placed in the later part of August and beyond. The bill also made changes to certain emission standards, but it is already and will start paring them back as we start to sell. If you're in the US and looking to buy a car, place your order now, as we may not be able to guarantee
buy
delivery
now, I remember this.
orders placed in the later part of August and beyond. This in turn will have an impact on the new sales of regulatory credits to other OEMs, and in turn will lead to lower revenues. While we never plan our business around such sales, it will nonetheless impact our total revenues going forward. On the automotive product portfolio, the entire lineup is updated. Globally, we're seeing an increase in the number of test drives. We started the production of the lower cost model as planned in the first half of 25. However, given our focus on building and delivering as many vehicles as possible in the US before the EV credit expires, and the additional complexity of ramping a new product, the ramp will happen next quarter, slower than initially expected.
Oh, okay. He's
One thing
basically
which is
saying
grossly underappreciated, and Elon talked about it, is lower than this is by new standard for safety within vehicular transportation. We published our vehicle safety report earlier today, and you can see the car on FSD is 10x safer than the car not on FSD.
Yeah, we know that. Basically, what he's saying is we want to manufacture as many cars as possible before this credit expires, so we're delaying the Model 2.
Version 12 of FSD, we've seen the adoption rates really increase.
That's going to be
We've
adoption
seeing
rates on
the,
FSD.
on the automotive revenue front, despite reduction in regulatory credit revenue, and the total automotive revenue increased by 19% sequentially, even though total deliveries only improved 14%. This was primarily due to an improved ASPs because of the new Model Y. This helped in improving margin sequentially as well, along with improved mix and higher fixed cost absorption, despite an increase in cost from tariffs. We've started seeing the impact of tariffs in our P&L. Sequentially, the cost of tariffs increased around $300 million, with approximately 2/3 of that impact in automotive and rest in energy. However, given the latency in manufacturing and sales, the full impacts will come through in the following quarters, and so costs will increase in the near term. While we're doing our best to manage these impacts, we are in an unpredictable environment on the tariff front. The margins for the energy generation and storage businesses improved sequentially, while deployment reduced, primarily due to the ramp of power deployments at higher margins. We were able to achieve our highest gross profit for the business yet. Note that the overall deployments will continue to vary quarter to quarter. I think Elon covered this, that industrial storage will make a difference in this drive towards AI and data center growth. The energy requirements are increasing at a rapid scale as AI applications are very energy hungry. The quickest path to scale up energy is deploying storage. This is something that our customers have started realizing, and despite this business having the largest impacts from tariffs, we're seeing customers willing to accept some of the tariff impacts. The big bill has certain adverse impacts even for the energy business, most notably on the residential storage business due to the early expiration of consumer credits by the end of this year. The challenges of the storage business therefore remain both from the bill and from tariffs, and we're doing our best to try and manage through this, but we will see shifts in demand and profitability. The margins for our service and other businesses improves sequentially, primarily due to higher profits from supercharging and improvement in insurance and service center profitability. Operating expenses also grew sequentially as we continued our investment in AI projects, including additional expenses related to employee-related costs, including higher stock-based compensation and depreciation for AI compute.
Yeah, QuantumScape down 10%.
Especially R&D-related spend will continue to grow. We believe even in the current environment, it is the right strategy to keep making investments in these areas to position us for the long term. Other income grew sequentially, primarily from the mark-to-market adjustment on Bitcoin holdings, which was $284 million gain in Q2, while being $125 million loss in Q1. Just want to remind people that this would keep creating volatility based on the Bitcoin price. While operating cash flows increased sequentially, so did our CapEx, resulting in $146 million of free cash flow. We continue to make investments in various aspects of manufacturing, like the Cybercab, semi-lines, and other manufacturing spend, and the expansion of our AI initiatives. Our latest expectation for the year in terms of CapEx is in excess of $9 billion. To summarize, we have near-term challenges in our business due to the negative impacts of the bill and tariffs. However, the investments that we have made for AI, robotics, and our lead in energy sets us up for a bright future. I would like to thank the whole Tesla team, our customers, our investors, and supporters for their continued belief in us.
Great. Thank you very much, Vaibhav. So now we're going to move on to Say.com questions. The first question is, can you give us some insight how robotaxis have been performing so far, and what rate you expect to expand in terms of vehicles, geofence, cities, and supervisors?
Yeah, robotaxi has been doing great so far now, and customers really love the experience. like super smooth, very safe, and like just a great experience overall. And we already did a first wave of expansion in Austin, and we'll continue to expand in Austin to probably more than 10x our current operating region. We're also testing in a lot of other cities, as Elon mentioned. The next thing to expand would be in the San Francisco Bay Area. We are working with the government to get approval here, and in the meanwhile, launch the service with the person in the driver's seat just to expedite, and while we wait for regulatory approval. We're also testing a lot of other cities in the US, including Florida, Nevada, etc.
Great. Thank you very much, Ashok. The next question is, what are the key technical and regulatory hurdles still remaining for unsupervised FSD to be available for personal use? Can you provide a timeline?
We're certainly getting there. I think it'll be available for unsupervised personal use by the end of this year in certain geographies. We're just being very careful about it. So.
This is not something which we want to rush.
No.
We want to make sure that everything is safe before we make it available broadly.
Yeah, we're just being extremely paranoid.
Yes.
But I'm confident that by the end of this year, within a number of cities in the US, it'll be available to end users.
Yeah, and for what it's worth, the same AI hardware in the Austin robotaxi vehicles has some customer vehicles, and we did deliver a car autonomously from the factory to a customer. Water.
Yes.
And every Tesla manufactured in the US and in Europe autonomously drives itself from the end of line to the loading docks. And so it's just a software upgrade away.
Yeah. I think we'll end up delivering cars in the greater Austin area and the Bay Area by default from the factory by the end of this year. Like a car will deliver itself to where you are, unless you say you don't want that.
It'll be super cool.
Yeah.
Great. Thank you, guys. The next question is, what specific factory tasks is Optimus currently performing, and what is the expected timeline for scaling production to enable
moving
external
boxes?
sales? How does
Empty
Tesla
ones.
envision Optimus contributing to revenue the next 2 to 3 years?
Yeah. So the Optimus 3 design, as I mentioned earlier, is I think finally the right design. There'll be further optimizations, but there are no fundamental changes that are needed for the Optimus 3 design. It has all the degrees of freedom that you really want or need. So we'll have prototypes of that in, I don't know, 3 months, and then start tooling up production. We'll certainly start production on that in the beginning of next year. The production ramp is difficult. It's always difficult to predict the S-curve of a production ramp when something has got when everything is new, because the rate of production will move as fast as the least lucky and least confident element of the entire supply chain, as well as in internal processes. So the more new stuff that is in a product, the slower the ramp could be because of unexpected supply chain interruptions or mistakes made internally. It's much easier to predict sort of the end of the S-curve or late in the S-curve than the beginning of the S-curve. And the beginning of the S-curve of the production ramp is in any case not really material for revenue purposes. The beginning of the S-curve, you're always negative gross margin, and you're debugging a lot of issues. So that's why I feel like fairly confident in predicting things, or at least medium confident in predicting where we are in 5 years, but it's hard to predict where we are in a year or 2 years. So that's why I think 5 years, I think we could be at the, this way, I'd be surprised if at the end of 5 years, 60 months from now, if we are not roughly making 100,000 Optimus robots a month in 60 months, I would be shocked.
All right. Thank you very much. Next question is, can you provide an update on the development and production timeline for Tesla's more affordable models? How will these models balance cost reduction and profitability, and what impact do you expect on demand in the current economic climate?
Well, I think Vaibhav did a good job of answering this question in his opening remarks. As we said, we started production in June, and we're ramping quality builds and things around the quarter. And given that we started in North America and that our goal is to maximize production with the IRA cliff ending in Q3. We're going to keep pushing hard on our current models to avoid complexity. Then, fortunately, when that rolls away, we'll be ready with the new, more affordable models available for everyone in Q4. And the goal with those products was not to negatively impact revenue or gross margin, but just to make a car that everyone loves and wants at a more affordable price.
Great. Thank you, Lars. The next question is, can you talk about the benefits of Tesla investing in XAI?
This is not the forum to discuss this topic. I mean, if there is something which we need to discuss, we'll discuss it separately.
I think obviously, we're a publicly traded company. Shareholders are welcome to put forward any shareholder proposals that they'd like. I've recently encouraged that, and then have shareholders vote, and we'll act in accordance with the shareholder wishes.
Great. Thank you very much. The next question is, can you tell us a little bit more about what goes on in the Tesla design studio?
Do you want me to take that one? We kind of generally say that what happens in the studio stays in the studio, and that earnings calls are not the place to disclose new product stuff. But we're working to make sure that we have an exciting future for our Tesla in the product lineup.
Yeah, there's a lot of exciting things happening in the design studio. It's not like static. And really what's going to happen over the next several years is a fundamental transformation of the company from a pre-autonomy world to a post-autonomy. And I'm working on a new master plan to articulate that Tesla team. And there will be some teething pains as you transition from pre-autonomy to a post-autonomy world. But I think the future vision for Tesla is incredibly exciting, and will profoundly change the world in a good way. So you sound like sort of pipe or whatever, but I think let's just say if we execute on that plan effectively, which is you have to actually do that, Tesla will be the most valuable company in the world by far.
Great, thank you. The next question is actually a duplicate on unsupervised FSD for customer vehicles, so we'll skip that. After that is, are there any news for Hardware 3 users getting retrofits or upgrades? Will they get Hardware 4 or some future version of Hardware 5?
I mean, what we want to do is we want to get unsupervised done on Hardware 4 first. Once it's done, then we will go back and look at what we need to do with the Hardware 3 cars. I mean, like I said, the focus is first to get unsupervised out, and then we'll go back and see what more work we need to do.
Great. The next question is, can you give an update on Dojo, and could XAI be a customer for Dojo?
Yeah, sorry, I was breastfeeding.
Dojo 2, we expect to have Dojo 2 operating at scale sometime next year, with scale being somewhere around 100K H100 equivalents. And then AI5, which is really a spectacular chip. I don't use those words lightly. It's a spectacular chip. The AI5 chip will hopefully be in volume production around the end of next year. That has a lot of potential. I think thinking about Dojo 3 and the AI6 inference chip, it seems like intuitively we want to try to find convergence there, where it's basically the same chip, but is used where we use, say, 2 of them in a car or an Optimus, and maybe a larger number on a board, like kind of 512 on a board or something like that, if you want high bandwidth communication between the chips at a forced serving, doing inference serving. That sort of seems like intuitively the sensible way to go.
Great. The next set of questions have all actually been covered. So we'll end with how will the BBB elimination of tax credits for solar projects affect your sales pipeline for Megapack?
Yeah, our sales pipeline is quite diversified across customers and market segments. So we aren't heavily weighted in Megapack projects that are paired with solar. And as we talked about in the opening remarks, we're seeing storage quickly being recognized for its ability to unlock grid efficiency and how quickly it can be deployed to help the grid. Additionally, although the recent bill was not favorable towards solar, we believe solar projects will still get built because the energy is necessary, the projects are well developed, and they're ready for execution. And there's really no alternatives in the near term given gas turbine lead times and pricing. We also continue to see growth in the data center segment and in standalone storage projects providing capacity to the grid in several markets across the U.S. Overall, we're forecasting a very strong second half of the year as we increase deployments. And lastly, we continue to invest heavily in U.S. manufacturing to mitigate policy and tariff impacts, expecting our first LFP cell manufacturing facility to be online by the end of the year and launching our third megafactory near Houston in 2026.
Great. Thank you, Mike. We will now be moving to analyst questions. The first question comes from Emmanuel Rosner at Wolfe Research. Emmanuel, please feel free to unmute yourself whenever you're ready.
Great. Thank you so much. Can you hear me?
Yep.
Thanks. So Elon, are you able to share any KPIs with us in terms of the robotaxi business? How many vehicles are you operating, miles driven autonomously, or the number of safety critical intervention? Just curious, how the rollout it generally is going in any sort of
key performance indicators, by the way.
More broadly.
Sure. Do you want to?
Yeah, we have more than 7,000 miles operating in Austin area. It's just because service is new, we have a handful of vehicles right now, but then we are trying to expand the service in terms of both the area and also the number of vehicles, both in Austin and other locations. So far, there's like no notable safety critical incidents. There, sometimes we have our own restrictions as to, for example, we restrict our speed limit to 40 miles per hour roads. And if the vehicle wants to go on like higher speed roads, we can stop the vehicle, but those are out of convenience as opposed to safety critical nature. So far, the service has been really well received, and we continue to expand on it.
Great. And that, longer term, from an economics point of view, longer term, you've previously talked about working to drive down the cost per mile on robotaxis, maybe towards 30 or 40 cents per mile over time. Now that your service is live, how should we think about the main milestones to getting there?
Yeah, well, the Cybercab which is really optimized for autonomy. That I think has got probably sub 30 cent per mile potential over time, maybe 25. It's really like if you design a car from scratch to be a cost optimized robotic taxi like Cybercab. Like for example, we're not trying to make it corner like incredibly well like a Model 3 would, or Model S or even Model Y. Like it's got all of our cars that are driven by people are super fun to drive. They've got incredible acceleration, the incredible cornering capability. But we're confident that very few people in a Cybercab want to be hurtling around. So we reduced the top end speed, which means we can use more efficient tires. We don't need as much acceleration. We don't need as much, big brakes to sort of. We want stopping distance, but we're not expecting it to be heavily used. It's a gentle ride. Essentially, if you design it for a gentle ride, and then you have a much more optimized design point. So that's why it seems probable that we could achieve that.
especially if Optimus is, serving, cleaning up the car and doing maintenance and stuff. Doing automatic charging. I think it's going to, the actual cost per mile of Cybercab will be very low. The cost per mile of our existing fleet will be higher, but it's still very competitive.
It's not necessary to be a sports car, in other words.
Yeah, maybe some number of 50 cents, I'm just guessing.
Lunch.
Yeah, so this really, Tesla's road taxi fleet will go from tiny to gigantic.
Egg.
In terms of operations.
Salt. Pepper.
In a pretty short
That's all you
period of time. Like, my guess is it has a material impact on our financials around the end of next year.
Great. Thank you very much. The next question comes from Adam at Morgan Stanley. Adam, please unmute yourself.
Great. Hello, everybody. So Elon, as Tesla moves into this next phase of physical AI, autonomous humanoids, robotaxis, etc., world-changing, civilizational species-changing technology with dual purpose, are you comfortable moving Tesla in this direction while only having a 13% stake in the company? Is that sustainable, or do you still insist that something needs to happen, given your current lack of control and the types of technologies you're getting into?
Yeah, that is a major concern for me, as I've mentioned in the past, and I hope that is addressed at the upcoming shareholders meeting. It is a big deal. I want to find that I've got so little control that I can easily be ousted by activist shareholders after having built, this army of humanoid robots. I think that, as I mentioned before, I think my control of Tesla should be enough to ensure that it goes in a good direction, but not so much control that I can't be thrown out if I go crazy.
Okay, Elon, you're not going to go crazy. We trust you.
Well,
you can stay a little crazy. A little crazy is okay. Elon, though, we understand the board of directors of a major U.S. investment bank recently toured Optimus production. I don't know if you want to confirm that or not. It's just what we've heard. That's cool. But when do you think others will be able to get a firsthand view of Optimus like that? And is the second half of this year too soon to have an AI day? Because it seems like everybody else in the world's doing it, and this talent war is getting freaking crazy. And I know you've mentioned for recruiting purposes, this is a very important thing that you've done. I think people have copied you on this, and I'm wondering if this year's too early for that. Thanks, Elon.
Yeah, it's a bit of a tough thing because, when we're doing AI day, we find that some of our competitors have literally done a frame-by-frame examination of our slides and everything we say, and then copy us. I'm saying, what's the trade-off? It does help with recruiting, but then competitors look very closely and copy us. That said, we should probably, I guess we could consider the shareholder meeting to be sort of we can maybe go into depth, some amount of depth at the annual shareholder meeting with respect to Optimus and AI and sort of our chip stuff, perhaps. Tesla's also really underrated in terms of AI chip design, as well as AI software. There's still not a chip that exists that we would prefer to put in our car. That is an AI chip that we would prefer to put in the car over our own. And even though it's been now out for several years, and we're confident that the AI5 chip will be a profound game changer. In fact, it's so powerful that we'll have to nerf it to some degree for markets outside of the US because it flows way past the export restrictions. So unless the export restrictions change, we actually will have to nerf our AI5 chip, which is kind of weird. Hopefully we keep raising the bar on export restrictions. Otherwise, it gets a bit silly. We'll have a bunch of Optimus robots on stage at the shareholder meeting. The Optimus Lab is cool to see. It basically looks like the set of Westworld. You could robots in various stages. Some of them are, in various stages of repair. Like, I don't know, some combination of like the Tatooine junkyard and Westworld. That's what it looks like. It's very cool. And Optimus is walking around the office here in Palo Alto. So just 24/7 is just walking around like it's normal. And you saw Optimus like, the Tesla diner serving popcorn.
Wasn't the question what Optimus is doing? Like, I never heard an answer to that.
Robots are rare to where they're so common that you don't even look up.
Great. Thank you so much. The next question comes from Edison at Deutsche Bank. Edison, please unmute yourself. Edison, please go ahead and unmute yourself. All right, while Edison figures that out, we will go to the next question, which is going to come from Dan Levi at Barclays.
Good point. Optimus is walking around. They did say that.
Great. Thank you. Elon, you've talked about the opportunity to put non-Tesla owned vehicles into the robotaxi network. Just talk about the gating factors to enabling that and what timeline we should expect on personally owned vehicles in the robotaxi network.
We haven't really thought hard about that. We need to make sure it works when the vehicles are fully under our control. It's kind of one step at a time here. We don't want to jump the gun. As I said, we're being paranoid about safety. So it's like, but I guess it would like next year is, I'd say confidently next year. I'm not sure when next year, but confidently next year, people would be able to add or subtract their car to the Tesla fleet.
I mean, one thing to keep in mind is that we will have some criteria, because like even when you put your car in an Uber or Lyft fleet, they go through a whole checklist process of making sure things are working.
It's like an Airbnb or
yes.
Bad, yeah.
Yeah, so we will do something like that.
Kind of vetting process.
Yes. Because we want, like Elon said, we want to be paranoid about security. I mean, small things like tread on the tire can have an impact on safety. So that's why we would want to do some proper validation before we let other cars come in.
Dan, do you have a follow-up?
Yes, thank you. Could you just unpack the different costs associated with scaling the robotaxi business and how you think about funding those costs? Are the cash flows in the auto business sufficient to fund it? And if not, what other funding sources do you think you'd use? Would you just fund it off the balance sheet?
Well, as soon as there is a clear cash flow stream associated with any product, you can debt finance it.
And in the interim?
I mean, in the interim, we will use our balance sheet, but like once we get to a certain scale in terms of recurring revenues, like Elon said, we could get into easily a year's kind of transaction to try and get funding.
Great. Thanks so much. We will now move on to Mark from Goldman Sachs. Mark, please feel free to unmute yourself.
Yes, good afternoon. Thank you very much for taking the questions.
With the FSD trials that Tesla has been offering to consumers and the attention on self-driving more generally, are you able to comment more specifically on what you're seeing with FSD subscription trends and take rates, and help us better understand how large FSD revenue may be currently?
So we've definitely, like I mentioned it in my opening remarks, since we've launched version 12 of FSD in North America, we've definitely seen a marked improvement in the FSD adoption. And the other thing which we had also done last year is we did bring down the pricing, and we made subscription much more affordable. So we have seen, 25% increase since that time. So, which is an encouraging trend. But honestly, we've just started the story around explaining the benefits of FSD. Like I said before, we released our vehicle safety report. Even if you don't believe in this, anything else, a car on FSD being 10x safer should be a motivator. Plus, the other thing is, people don't realize even at $99 a month, it's like you're getting a personal chauffeur for almost $3.33 a day. And this is by far the biggest game changer, which I know we've been talking about it because part of it is we live and breathe it, but
yeah,
I feel
most people still don't know.
Yeah.
The vast majority of people don't know it exists. And it's still like half of Tesla owners who could use it haven't tried it even once. They don't actually realize that. Obviously, this is something we want to educate them on. So we've got to, when they come in for service, we'll reach out to them, send them like videos of how to make it work. It's such a shocking thing. They don't think a car is capable of this. So you have to show them and get them comfortable with turning it on and off. It's so trivial, but it's like saying you've got a cat that can sing and dance, but it just looks like a normal cat. And you're like, until you see the cat sing and dance and talk, you assume it's just a cat. That's Tesla FSD.
Yes.
Our car is intelligent.
And so what we're going to do, to Elon's point, we've been giving people free time to try the FSD, but we'll start giving more prompts to say, okay, this particular drive, try FSD. So that, because it's literally seeing is believing. Like Elon said, think of it like a cat. It looks like a normal cat, but this cat can sing and dance.
Yeah.
Same thing on
It's
FSD.
intelligent.
Crap, I didn't think I'd have to adjust the chart.
And that 25% comment was 25% increase in the penetration
Hey!
since we've seen the release
My line!
of V12 and V13 in North America. Great. Thank you. Mark, did you have a follow-up question?
Yeah, thanks, Travis. Tesla has historically said it would use pricing as one tool to help drive auto vehicle growth as long as free cash flow stayed positive, given the ability to monetize products like FSD. I'm curious how you're thinking about pricing from here as a potential tool to drive increased volumes, given where you stand with FSD, as well as the fact that the IRA purchase tax credits are poised to go away in the U.S. starting in the fourth quarter. So should we expect more meaningful price reductions given that monetization potential, or do you envision price reductions being more limited compared to cost downs given where free cash flow now stands? Thanks.
Well, we're in this weird transition period where we will lose a lot of incentives in the U.S. We still have incentives actually in many other parts of the world, but we'll lose them in the U.S. But we'll still be at the relatively early stages of autonomy. On the other hand, autonomy is most advanced and most available from a regulatory standpoint in the U.S. So, does that mean we could have a few rough quarters? Yeah, we probably could have a few rough quarters. I'm not saying we will, but we could. Q4, Q1.
Yep.
Maybe Q2, but once you get to autonomy at scale in the second half of next year, certainly by the end of next year, I think I'd be surprised if Tesla's economics are not very compelling.
Great. The next question is going to come from Will from Truist. Will, please feel free to unmute yourself when you're ready.
Great. Thanks so much for taking my questions. First, I'd like to ask for a little bit more detail about the lower cost model that you talked about having, I think, started production in the first half, but you said will ramp later. At the last Analyst Day, as I recall, you talked about some aspects of this, like two-thirds or three-quarters reduction in silicon carbide and not using rare earths in the motor and perhaps other cost downs. You also had this unboxed architecture that I think you said would not be part of this sort of interim approach. Can you update us on what we should expect this thing to actually look like?
Well, we won't get into the looks because
What's the Model Y? Yeah. Leave the cat out of the bag there. Dancing cat that can sing and dance, but it can talk and sing and dance. Though that's the cool part. Yeah, I mean, the fundamentally the biggest obstacle remains that people just don't have enough. Some people don't. The desire to buy the car is very high. Just people don't have enough money in their bank account to buy it. Literally, that is the issue. Not a lack of desire, but a lack of ability. So the more affordable we can make the car, the better. I think it's going to be. It will be a very big deal when people can release their car to the fleet and have it earn money for them. Which, like I said, I feel confident in saying that'll happen next year in the U.S. at least. In the U.S. we're legally allowed, appropriate disclaimers, and that'll make the affordability dramatically greater. Just like you could if you have an Airbnb and you can rent out your home when you're not there, or rent out a guest room or guest house or something like that, the affordability of your home is much greater.
Okay. Trying another topic then. We see all these wonderful developments at XAI like Grok, and obviously Tesla's trying to do quite a bit in AI. Elon, how do you manage the division of efforts and recruiting and talent and capital between these two that seem like there's a very high potential that they can in fact compete?
Well, they are doing different things here. The XAI is doing terabyte scale models and multi-terabyte scale models. Tesla's 100 times smaller models. So one's real world AI and one's kind of, artificial superintelligence type of thing. Really kind of the genesis for XAI was that there were certain people who...
And 318.
Tesla AI engineers, because they wanted to work on ASI. They would join Tesla. And I was like, well, maybe they'll join a new company. I think the Tesla problem is extremely important, but not everyone agrees with me on that. And so rather than have them join, OpenAI or Google or some other company, it's like, may as well have them create a company in that regard, which is XAI. So that's people can make a decision. Do they want to work on super intelligence at data center or real world AI? They're both compelling problems, but some people want to work on one and some want to work on the other.
Great. And unfortunately, that is all the time we have today. Thank you everyone so much for your questions, and we will see you next quarter.
Wow. Okay, what a freaking dump there. Holy smokes. All right, let's recap this. All right, here's a recap of what was just said on the Tesla earnings call. We went from up 50 basis points to down 4.5. We are at the very moment losing the 318 line, critical line. Remember, before earnings, we were in no man's land, so it was either up or down. The goal was to go up on talk of new models, especially after the UBS rumor that there was going to be a Model Q getting released, at least for the Chinese market. Unfortunately, we got way more caution from the Tesla executives than we would have bargained for or hoped for. Not great. Okay, so let's talk about some of these details. First, I'm going to focus on some of the nitty-gritty. We heard that the delay now in a potential more affordable model is to avoid the complexity of other models, to avoid reducing the margin or competing against their own other products. So in other words, cannibalization. And they want to make sure that they produce as many of these as they can now because of that EV tax credit. So basically, they give 3 reasons why they're delaying an affordable model right now. 1, complexity. 2, not cannibalizing their current vehicles. And number 3, they want to print as many vehicles as possible now because they want people to be able to take advantage of the tax credit, where they're like, hey, by the way, buy a Tesla because if you place your order after late August, you might not be eligible to get the tax credit anymore because we might not be able to deliver before September 30th when the tax credits expire. So they kind of turned it into this weird, like, yeah, let's sell what we have now. That's how our affordable models are going. And people are like, huh? The stock market didn't like that. We saw a little bit of a sell down as soon as they started talking about that. Then we got a little bit of a sell down when Elon was talking about retooling Optimus. He was asked about what's Optimus doing, and Elon said, well, started talking about Optimus, started talking about how basically they need to retool Tesla, that like its design is fundamentally good, but they're gonna have to make a V3 prototype. And hopefully they can make that V3 prototype by the end of the year, and then they could scale it next year. Which remember earlier or late last year and early this year, they're like, oh yeah, we'll scale V2 this year because it's great. And now they're like, it's fine. And when it came to like, what does it actually do? The only thing we heard was that Optimus is walking around the office in Palo Alto, which wasn't great either, right? Like people are looking for some juice here. And again, that's why I think we saw some of these red candlesticks come in. So I'm just trying to align, like I made little notes, like when were the red candlesticks coming? The first red candlestick was, when our CFO comes on and starts talking about the impacts of the big beautiful bill, and then of course we got a red candlestick on Optimus by the end of the year. But then we also got a red candlestick when Elon says he wants to, he's working on a new master plan for Tesla, and I think that got people scratching their heads a little bit, where they're like, wait, what do you mean a new master plan? Is there something wrong with the other master plans that we've been working on? So that was something that came up. There was also this talk about the cost of tariffs being $300 million and specifically hitting the battery division. Both Elon Musk and the CFO framed robotaxi as kind of a way to sell supervised FSD. Like, oh, the more people want to use robotaxi, the more they want a car with supervised FSD. And it was kind of weird because it was sort of like, they didn't really want to commit to like talking about the economics of robotaxi, though we did get some numbers on that. We'll talk about that in just a moment. They instead were like, hey, the cars people are using for robotaxi now are kind of like, the cars you could buy. So it's a great way to sell FSD, which I think is true. Then they get asked about the Cybercab, and they basically talk about how the Cybercab will be cheaper because it won't need the acceleration or the turning, capabilities. It won't need the high-speed tires. It could use lower-speed tires. It could use lower-speed brakes and components, basically, because it's supposed to be more of a stable ride anyway. This is where Elon thinks you can get the cost per mile under 30 cents, maybe even under 25 cents, which that was great. But now the question is, what are the revenue economics? Most people take the Cathie Woodian argument and go, oh, 50 cents per mile, that's 50% gross margin. But I think that's a stretch, given that you really need to assume that your pool of robotaxi, riders expands. in place of, Uber or Lyft, or that massive competition in the space doesn't compress that. Because if you're operating at a 10% margin, a 30 cent versus a 27 cent or 28 cent or whatever, is it worth it, right? That's the big question. So some weird things here. So we got vagueness on the affordable models. Again, UBS leaks this Model Q for China, but the leadership was really sort of vague on new models here. Again, focusing on avoiding complexity and don't want to have margin compression and don't want to cannibalize. And, we're going to focus on the credit expiration. Oh, by the way, we have $300 million in increased tariff costs. But buy now, because otherwise we can't guarantee delivery. That was interesting. Elon Musk briefly talks about the 13% control that he has still being a little bit of an issue because he thinks that activists are going to take over and kick him out after he builds an army of robots, and he thinks that'll be bad for humanity. He also forecasts that we're in this weird transition period where we'll lose these incentives. This is actually something that I mentioned earlier, that we're sort of in this lull of Tesla now. And the reasons we're in this lull right now are because we're losing the ZEV credits July 4th. We're losing the $7,500 EV tax credit September 30th. We're losing the 4K used tax credits September 30th. We're losing the home energy tax credits at the end of the year. We just took a benefit of $320 million for a crypto valuation adjustment, which helped us have free cash flow, which otherwise we would have been negative, right? And then the upsides on things like no politics and a Model 2 or Q. I mean, politics, great, no politics, but the Model 2 Q talk was really weak. It really wasn't exciting, right? Obviously, they're like, hey, this isn't the place for product announcements, but we also don't have anything on the calendar for real product announcements. And we're not using cybercabs on the road right now. Now, we're using regular Model Ys. Now, there was this talk about potentially us being able to submit our cars to a robotaxi network next year. I think that's a total Elon line right there. I don't think that's realistic whatsoever, but he did say it. And he did also say, which I think is realistic and honest and fair, he says that we're probably going to see a few rough quarters. He says, could we have a few rough quarters? Yeah, we could, probably. Q4, Q1, maybe even Q2. We need to scale. Now, he doesn't talk about exactly scale what, but the assumption here is we need to scale Robotaxi and Optimus. And then he says, I'd be surprised if Tesla's economics are not compelling next year. So, in other words, could the next 3 quarters suck? Yes. And he said that before, and so I think it's honest. I remember him saying that back in 22, and yeah, you had a couple years that were, pretty rough there. So I don't think he's wrong about that. I think they're realistic here. So unfortunately, I think you've got a delay in the affordable models, which is a near-term oopsies. You've got a delay in Optimus because you're kind of like, hey, we have to make everything new. The gearbox, the sensors, the motors. Remember how I've been talking about like the overheating issue with motors when these Optimus robots or robots in general pick up heavy boxes over and over again 24/7? Like, eventually those joints start overheating a little bit, right? So that's a problem. This requires not only getting new motors or inventing new motors, but then actually proving that those work. And then, of course, you get this talk about a new master plan. It's kind of like, the call seemed very, how should I put it? The call seemed very, I don't want to use the word defeated, but it seemed definitely low energy. And it just seemed, it didn't seem like a usual Elon call. It seemed like today, like, I don't know if he's off the ketamine or what, but like, get where's that happy party Elon? He wasn't here today. And who knows, maybe that's a good thing because then we got like a more realistic Elon. But that is something that I noticed that was a little bit different. So let's see here. I'm going to look at what some of y'all say in the chat here. Tesla won't be making enough money to keep up or compete. Waymo was smoking them in self-driving. I don't know. I mean, that's an opinion that's out there. I'm excited about the scale that they can achieve without relying on LiDAR and mapping. I'm pretty excited about that. Lil says, hey, Kev, I'm Mikey's neighbor. We do content with your older. Let's go. That's freaking awesome. Good for you. What up? That car is freaking sick. If I actually had a driveway, maybe I would have kept it. I don't own a driveway. Well, not where I live, at least. All right, what else we got here? So I'm just looking at some. Optimus also serves popcorn. Yeah, purposefully. Remember, notice how that's lightweight, right? That's a big deal. Lightweight product, very lightweight product. The box is lightweight. You know, the item inside the box is very lightweight. Uber wins here. Well, that's why Uber is partnering with everyone. Do you have a brother, Kevin? No. They do not refer to the big beautiful bill. They call it the one big bill. That's what they referred to it as. And then somebody's asked me, what's the coupon code? That's right. If you haven't yet taken advantage of the coupon code, go to meetkevin.com. Use coupon code release the files and become a member of the Meet Kevin Alpha Report for life. You get access to all of the courses, the course member live streams, the Alpha Report, the fundamental analysis on real estate, on sales, on stock fundamentals, on trade alerts, you name it. Check it out at meetkevin.com. Okay, cool. So yeah, that gives us an overview of all of that. And let's see what's going on the tech trends here. Yeah, we've got some red on Google's only up 178 right now. Google on my line, Tesla breaking the 318 line. The Qs are really close to the line. And where's our boy Rocket this morning? There's Open Door, 2% in the after hours. There's no volume over here. And then Rocket, still on my line. Wow, that's crazy. Okay. Well, in honor of Tesla earnings and the latest Epstein news, you can go to meetkevin.com and use coupon code RELEASETHEFILES to get the Alpha Report and my trade alerts every day before the market opens, so you're prepped. All right. Cool. Boom. All right. What else? Is that it? I think that's all I got. Release the files. Course member is absolutely worth it. Oh, thank you. I don't care. Keep shilling it, Kevin. Oh, thank you. So, all right. Well, I think that's a full and fair summary here of everything. Somebody says, love the color of the shirt. Yeah, this is the House Hack shirt. House Hack.
Kevin is very talented, but I don't know if it's going to be him, but he's a very talented guy.
Kevin is much more interested than most people, by the way, in the balance sheet.
All right, I gotta go. Let's end this. Appreciate y'all being here, folks. See you in the next one.
Kevin's somebody would consider. Kevin is fantastic. Kevin is very talented, but I don't know if it's going to be him, but he's a very talented guy.
Kevin is much more interested than most people, by the way, in the balance sheet.